Ladies and gentlemen, good, very early Monday morning, President's Day in the United States. Welcome to another edition of the Toxic Happy Hour, where we are toxic towards scams that delay the adoption of global sound money. I have a feeling that today we're going to talk about one of the bigger scams of this last century. We've got Heavily Armed Clown and Ben in the studio from WTF, happened in 1961.com.
71. 71. Come on, Anders.
What did I say?
61.
I can't hear.
Well, it certainly was 71. You're right. We can hear you. You can't hear us, Ben, but we can hear you. We can hear you. Lads, welcome to the Toxic Happy Hour. What are you guys drinking today? Let's go with you, Heavily Armed Clown.
Oh man, I'm drinking some poor man's Jim Beam right now.
Nice.
All right.
I'm ashamed to even
Sounding
admit
good. Ben, you cannot hear us, can you, Ben?
Hey, can you guys hear me?
Yes.
Oh yeah, yes.
Because I can't hear Danish for some reason.
Can you hear me, Ben?
Never-ending technical difficulties here. I don't know what's going on. You want me to try to rejoin?
Yeah. Why don't you somebody tell him to rejoin with maybe just the audio.
Yeah.
There we go. So yeah. Pubby, what are you having today?
Oh yeah, I got a couple choices here. One, I have the nice Chimay beer. Picked it up at the local store here. But the nice thing, in West Africa, the French may have screwed up many things here, but you can always find some good French wine. So I got a nice little Bordeaux as a backup.
Nice.
Yeah, man.
So, Heavily Armed Clown, you guys have been working together on this website, I presume. Can you tell us the backstory? Like, I've put on the site several times. We have the link down below in the show notes. We also have the links to your Twitter and everything, of course. But a lot of graphics showing that something happened. Like, how did this start for you guys?
Yeah, I don't know, man. I'm excited to hear what happened in 1961.
Yeah, that's when I was born.
So to make a long story short, Ben and I are nerds, right? Like not like Star Trek nerds, but like talk about data and history nerds. And we kind of became friends because he just reached out to me randomly one day and wanted to come on my podcast. And we figured out, hey, we have a lot in common. Like, we both read a lot of Austrian economics and trawl through the depths of like Wikipedia looking for non-whitewashed pages on history. And we kind of came across like Lection Point, talking about monetary history and like talking to like in particularly the history of the United States dollar system and the banking system, and talking about like 1971 and being such a huge inflection point. We noticed that so much of the data that you look at just goes completely off the rails after 1971. And one day, Ben and I realized that, with all the constant arguments we were getting on Twitter with people regarding, inflation and the gold standard and why Bitcoin fixes so many of these problems, we kind of had the same idea. We're like, what if we just throw this on a website? And it just so happened that we were accidentally smart enough to turn it into a meme that got really, really popular. I think we had like almost 1 million hits on the site in 2020.
Damn.
Yeah.
Wow.
Yeah, it's funny because if you start doing the research that Colin's talking about doing, right, you'll find eventually a page called the Nixon shock, right? So there's already Wikipedia has their own page for WTF happened in 1971. It's called the Nixon shock, and that was kind of like part of the impetus for this. Is there's a whole page about like all the crap that went wrong after Nixon did this, and man, we just put it in visual format, I guess.
And it's been really great too, because now it's to the point where we don't have to actually do anything. We just keep the website running and like shitpost on Twitter, and people send us charts, and we can like kind of pick and choose from the crowdsourced internet efforts at whatever it is that has gone all funky since 1971. So like a lot of the more obscure charts that you see on the site now, because you know we update it all the time, like we add new stuff when people send it to us, has come from like viewers or listeners to podcasts or like Twitter followers. So it's been actually great to like crowdsource the research effort.
Yeah, and it's funny because I'm noticing Sean Stacking writing in the chat there. He wrote a bad word about Nixon, and to be honest with you, like yeah, I mean Nixon wasn't a great guy, and I agree with the sentiment somewhat. But I think really to understand the story is to understand that it's really not just Nixon, right? This story started in 1913, 1933. It was a really pivotal year where they confiscated all the gold, and really the inflation that got away from the Federal Reserve in the 1950s and 1960s. If you learn about the Eurodollar system, Nixon didn't really have much of it. I mean, he's kind of in the same boat that they were in 2008 and in 2020. Is like there's no good options left. They've painted themselves into a monetary corner, and man, we're all just like plebs, like flapping in the wind, waiting to see what they'll do next, I guess, right?
And this is where like the whole. Oh, sorry. Go ahead.
Oh no, that's right. In fact, and we'll talk more about this later. But I got a couple notes here. The top one on my list was like asking, did Nixon really have a choice? It wasn't. I don't think it was going to be in there. But we get that. Yeah, it's funny. I was thinking of a good drinking game, and I know you guys talk about it ad nauseum. But you find any of your podcasts, and you take a drink anytime you hear the word Nixon, Gold Standard, or Bretton Woods, and it's pretty good. So yeah, so I'm sure you guys will give the backstory again. You do it all the time. You guys do great at it.
So are you guys all saying that because Nixon didn't have a choice, then it was okay to default on the international gold debt, or?
No, I mean no. It's like so it's an oversimplification, right? So people like to do this because it's way easier for them to put everything in a box, right? They can say it's easy for them to put everything in a box, all the problems in a box, and then point the blame at one person, right? You see this in politics today a lot with the rise of populism in the United States. Like everyone either loved Donald Trump or hated his guts and blamed him for everything that's wrong with the country, right? I mean, I could just as easily point a finger at Alexander Hamilton and say he's the one he's responsible for all of the problems in the banking system, right? And this is kind of like the problem that you see with a lot of political movements in the United States and why they sort of fizzle out and like don't gain any ground, or they dominate, right? Because they're really populist and they're really oversimplified. We saw this with like Occupy Wall Street in 2008, right? Where all of these kids that really don't know anything about anything are standing around on the street and being like, it's the bankers. The bankers have ruined our country and taken away our prosperity, and we have to shut down Wall Street.
No, it was Wall Street.
Really,
it wasn't the bankers. It was Wall Street. It was those greedy gamblers and traders. No, it was the mortgage backed. People buying too many houses.
No, it's the Rothschilds. It's the Rothschilds. No, it was Ronald Reagan. No, it was FDR. Like really, what it is a system with misaligned incentives from the top to the bottom, and you can trace the effects of those misaligned incentives all the way back through history, all the way back to the founding of this country.
So, but didn't this go? Okay, I think first of all, I'm sure we have a lot of viewers that don't necessarily 100% know exactly what happened in 1971. Either Heavily Armed Clown or Ben, can you just explain to us in summary what exactly happened, and then talking about the effects of that will maybe make more sense to people. I feel we need to get that. And as we do that, I don't know if you guys ever heard of. Do you guys all know about Irish coffee, or is that only a thing in Denmark? I'm not really sure.
No, we're pretty good at it here too.
Okay. Anyway, so I'm doing just no sugar, no cream, but just some coffee with some bourbon. So I guess this is American coffee.
Yes.
Okay. Ben or Heavily Armed Clown, and later we're going to talk about which weapons you arm yourself with. But please just give us a short summary of what exactly happened in 1971, so the viewers that are not aware of this know exactly what we're talking about.
Yeah, I mean, there's a short answer and a long answer, right? What happened in 1971 is Nixon came on TV and he said he's going to temporarily suspend the convertibility of dollars into gold, right? And obviously that wasn't temporary. And Senator Connolly, who told him to do that, later ended up personally bankrupt, which I find a nice little anecdote there. But what that meant at the time was simply that it wasn't that, actual citizens like you and me would be going to the gold window at the Federal Reserve and trading our dollars for gold. In fact, that had ended in 1933, much longer earlier. What it was ending was the convertibility of dollars into gold internationally between governments. And he finally severed that connection. And when he did sever that connection, he forced the world onto fiat money, like inadvertently, kind of, because of the Bretton Woods system. But the real story is like the history before that. And I'm sure Colin would love to comment on that.
And I mean, like I said, it goes back far. Like Rothbard wrote an entire book on this subject called The History of Money and Banking in the United States. But as far as like the immediate things that were going on that Nixon had to contend with, it was the London gold pool. So if you look at, we have a chart on the site, and if you look at it, it's basically the amount of gold in the U.S. Treasury. And if you look like through the 50s and 60s, it just tanks. Like even though the number of dollars in circulation is continually increasing, the amount of gold held in reserve in the U.S. Treasury is just constantly going down. And the reason for that was because of the London gold pool. So the United States was working closely with peers in the UK to fix the price of gold in the open spot markets, and it was requiring a huge amount of gold, coming out of the U.S. Treasury to try to keep the price of gold fixed at $35 an ounce, so that they could prevent huge outflows of gold. And actually, that ended up happening anyway. So, and that was in conjunction with like geopolitical events like the Korean War and the Vietnamese War, like just long drawn out military conflicts that the United States had no intentions of winning. Very similar to like the war in the Middle East that we've seen over the last decade. They're just long, they're expensive, they're political. There really is no objective other than just industrial military complex, turning its gears. And it ultimately led to what you could essentially consider a default on the gold backing of the dollar.
Right. Sorry, go
ahead.
Yeah. So if UK or Germany or something said to US, so we have this fixed peg between, for instance, the Deutschmark and the US dollar, and we can exchange that for gold. Now we want our gold back. In 1971, Nixon basically said, yeah, forget about it. We're just going to keep the gold here because we're running out of money.
Right. So at the time, it was actually the de Gaulle administration. I forget the name of the financial advisor that worked in France. That worked for the de Gaulle administration, and they were essentially calling America's bluff, right? Because America was dominantly and disproportionately benefiting from the amount of seigniorage that it was generating, because the dollar was the world reserve currency under the Bretton Woods system. Every other currency was pegged to the dollar, and the dollar was pegged to gold. That was sort of like a benefit that the United States wrought after, in the aftermath of World War II. And people, like the other countries, they were wise to this, right? They knew that the United States was benefiting disproportionately to other nations and printing more dollars than they had gold, right? So it was the de Gaulle administration who was ultimately threatening to start taking all of their dollars and cashing them out to gold. And that was sort of what, between that and the amount of gold lost in trying to fix the price in the London gold pool, which ultimately had to be shut down. The London gold pool had to be closed. And it didn't open again until Bretton Woods was ended, I believe. Nixon had no choice, right? There wasn't enough gold to be redeemed for all the dollars that were in circulation, so he had to close the gold window. But that doesn't absolve him of any of the guilt, that's for sure.
It's
okay, I get it. If someone else spent the money, sorry, Pubby, I'll give the word to you in a second. But if someone else spent the gold and it's not there, he doesn't have a choice. Even though we like to hate him, including me. But Pubby, go ahead. I'll just refill my coffee in the meantime. Go ahead.
No worries. Yeah, I don't know if this is an oversimplification as well, but one of the other factors I believe I heard was other countries realizing this just said, you know what the hell? Let's open up the printing presses a bit. We're already tied to a dollar. that's fixed. And the other countries that can start printing, you don't get that. That's going to be disastrous. In a way, your hand is almost forced to get off that gold standard.
Yeah, Pubby, it was sort of a speculative attack from that kind of perspective, and I really think to kind of sum up everything that that Heavily Armed Con and I have been saying this time is that this is the story of the failure of gold. The fact that we need this paper to transact, that we require these governments and their benevolence, right? We require their the rule of their pen to protect our monetary system is the illustration of the failure of gold itself. And that started long before all of this, even in the 1800s and stuff, when we started using warehouse receipts for gold. We started using these certificates, bank certificates, and this was the free banking era, right, of the United States before the Federal Reserve. And there were many bank failures in that time. There's a chart on our website that shows you all the bank failures before this time. And you can see it happens all the time, because anytime you have this paper that's not tied to the gold, you have these problems of inflation. It just always happens. The temptation to inflate money, to print money at will, should never be underestimated.
Was it Holzman in Ethics of Money Production who said that given the propensity to print money, the powers that be will always choose to create money for themselves? Was it Holzman who said that? Something so. I'm paraphrasing. Yeah, and really, like, if you really want to understand like the implications of 1971, and I wrote like a whole series of newsletters on this on our website. Like, you need to go and read Rothbard's History of Money and Banking in the United States, because what you'll see is a series of patterns, a series of booms and busts. Like all of those financial panics in the United States prior to the Great Depression, they were all caused by exactly the same thing. And because nobody except for nerds like Ben and I go back and actually like look at this history, the Wikipedia pages even admit as much. Like the things that caused these financial panics was expansions of the money supply by the government, expansions of credit, expansions in the bond market to prop up government spending and malinvestment, and then huge like cascading events of deflation and debt liquidation that just caused the market to absolutely tank because of all of the over speculation created by government expansion of the money supply and government expansion of debt. And every single time, what the government would do was suspend the redemption of specie. And what that means is just create a bank holiday, make it so that people can't take their notes to the bank and cash it out for gold bars, and suspend that cascading effect of liquidation of malinvestment. All that 1971 was, all that 1933 were suspension of the redemption of specie. And 1971 was actually 1933, Executive Order 6102, was the ultimate suspension of redemption of specie. And 1971 was the civil suspension of redemption of specie.
And the way you fix this is by making base layer settlement available to all, right? And not tied to, Nixon's word, so to speak.
Have an asset that globally self-settles, that self-clears.
Yeah, would you say that part of the problem for gold was because it was physical, you needed to do this, the IOUs, like the paper notes that could be redeemed on top of it, and that is just bound to fail because sooner or later somebody falls for the incentive of start using paper notes claiming gold that they don't actually have. And I have another question, and Pubby, I'll get the word to you as well.
Can you give them one at a time? Jeez, Danish. Stacking his question. Look at this guy. He's stacking questions.
All right, you know what? It's fair enough. You're right. That was a question. Why don't we give you guys a chance, including Pubby as well? You can finish it off. Ben Prentice, why don't you go ahead with that one?
Yeah, so because I mean, even if you look at Bitcoin, we're using money substitutes. We're using Lightning. We're using Liquid, right? There's some fundamental differences between paper tied to gold and like Lightning tied to Bitcoin, which are obvious probably. But the real problem that you did highlight really well is the physical locality of gold. And if you search Twitter for gold has severe flaws, one of the first few results will be a thread by Nick Szabo, who really does understand money. And if you really do want to understand money, you should read an article written by him called Shelling Out, where the whole article is literally just the history of money. And he starts all the way back at like before like pre-money things where they were using dowries with like cows to pay for wives and all this stuff. And then raiders who would come to villages and really understand how money is an emergent market phenomenon. To answer your question really directly is, the physical locality of gold is its downfall, right? It all ended up in the banks because we ended up being able to transmit information quicker than we could transmit the money. And we had to use scaling solutions to help catch up. And using those scaling solutions, they weren't tied. And there was this elasticity between the two. That's when you would get these like booms and busts that was just being previously discussed. So we need, if we're going to use scaling solutions, we're going to use money substitutes. They need to be tied, and there needs to be base layer settlement.
And people don't understand that the problems of scalability with gold are wide-reaching. And this game has been going on for a long time, right? All silver is, and all copper is, are analog scaling solutions to gold. Right? If you think about the fact that the paper they were analog, but in a sense they were also like digital in the sense that we think of informational, because they informationalized the transmission and the transaction process of gold, right? And the settlement happened still at the base layer. But the gold receipts, the gold notes, the gold IOUs were sort of like the next level of progression from silver and copper, which were just an analog settlement scaling layer for gold. But they were inferior monies. And if you ever go and look at like what happened under all of these bimetallic standards, they were inflationary, because oftentimes like silver was pegged at a higher rate to gold. And that caused all kinds of economic problems in so many of these countries like China and Japan, like where, international trade would show up at their door and they had their peg set at a slightly off rate compared to the rest of the world. And they would see all of their gold leave the country because we're on these bimetallic standards that weren't set by the free market. They were set by a bureau of financial advisors.
Heavily armed. You have a little bit something on your audio. It's like scratchy. I don't know if there's anything you can do. Someone in the chat said unplug and replug. I don't know if that'll help. But
I switched mics. Is this any better?
No.
No. Yeah.
Puppy, why don't we give you a chance to say something?
No, so that's right. We talk about the shortcomings of gold, and Sailor's brought this up a few times of the actual cost. If you want to take possession of your gold, the actual cost to physically move that gold is exponential. Bitcoin is roughly near zero, and thanks to work of like Jack Maurer now, it's free basically. But it's hilarious to me when you're thinking of that, of trying to move gold and have possession. And a great story. I think Ben has heard this one too. My favorite is when Maduro in Venezuela called the Bank of England and said, "Man, my gold." They said, "No, that's it." Game over.
They found out that trusted third parties are security holes. I was actually going to jump in and say that, Puppy. I'm glad you brought it up. It was all the gold, the world's gold, the government's gold is all in these centralized vaults. A lot of it's actually in the United States, right? And I think that in that case it was in Britain. And they said, "Oh, we'd like our gold," and they were like, "We're going to temporarily suspend the movement of your gold." So,
well, and this is something that Michael Saylor and Robert Breedlove talk about in Breedlove's Saylor series. Is that like if you were trying to preserve like $100 million worth of monetary energy for 100 years. Right. Even in the case of gold, you had to pick the winner in terms of custodial protection of that gold. Like if you had that money in Japan, right, or like in I forget some of the other examples that they used. But if you would pick the loser, you lost that monetary energy that you tried to preserve through centuries.
Yeah, absolutely. And I just heard that. It's funny you mentioned that. I was thinking of that one earlier too. It's like, what city did you pick to be a winner at 100 years from now? What city, or who's that trusted third party? Absolutely nobody. Absolutely nobody.
Right. So something I've been saying for a long time is that I consider that United States has defaulted twice on their debt. First time in 1933, where they defaulted on the private debt, which was until 1933, dollars could be exchanged for gold. in United States, and they basically said, yeah, you're not going to get the gold back now, and we'll just use the paper. We'll pretend it's money. And over time, with brainwashing in schools, etc., and media, people started to call, just paper notes money, even though it's just currency and it's keep being diluted. So that I consider that the first default, and then the second one, the one we're talking about in 1971, where U.S. basically did an international default. So when people keep saying that, oh yeah, the dollar's never going to collapse because this is like the world's richest country, well, it's defaulted twice already. So don't think it can't happen a third time. And third time's a charm. That's when Bitcoin's going to come in my opinion. But do you guys, Arm Clown, do you subscribe to that notion that U.S. has defaulted twice?
Absolutely, yeah, and more times than that. If you go back through the history and you study, go read Rothbard. You'll see it happened a lot, and it's always caused by one thing. It's caused by overspending on behalf of the governments, right? Because the politicians are not held accountable because their incentive systems are not aligned with that of the productive members of society. And this is a common theme that you see throughout all of history, is that in order for people to be able to deal with like these world-shaking events, or like certainly at least local life-shaking events, like in 1933, when people were no longer allowed to own gold. I think back to that and I wonder, like, how did people say okay to that? Like, how did they just go along with that? How did they not rise up and revolt? And the answer was because it was brought forward during a time period of great disturbance, right? It's very similar to what's going on in 2020, when we have all of these extremely radical new political devices being thrown at us from every direction. It's only because it's happening at a time of chaos and a time of uncertainty that people are willing to accept any of it.
Yeah, I was going to say that these are forms of soft default as opposed to hard default. And he brought up 2020, but I was going to bring up 2008, right? Where all these loans, it turns out they couldn't be paid back, right? So this is the soft default, right? It's the same thing in 1933 and the same thing in 1971. Well, we can't pay back all of it, so we're just going to kind of kick the can down the road. And then you get all these second order and third order effects that, our website's about, right? So it is the default. It is the liquidation of malinvestment that is trying to come. It is trying to come back to reality. I often say the 1929 was that same thing. It was that there was more paper printed in the 20s, the roaring 20s, and then us trying to come back to reality. That was the pain point, right? And we try to avoid that pain. And that's what the monetarists try to do. The monetarists who say, oh, don't touch anything until there's a crisis and then we can intervene. It's that trying to pick the least bad of multiple options. That's least bad maybe in the short term, but in the long term, I think has created many negative things.
And there's very few people that have the wherewithal to see where this is going right now. Like I know most of them. I follow most of them on Twitter. Like they look at this and they see the Japanification of debt that's happening in the United States, where like our Fed Reserve, this private institution that has the ability to print as much money as it wants, is having to sweep in and buy up all of the government bonds that are negative yielding in real terms. Yeah. Right? Where does that go? That doesn't go anywhere good. Like all that is the rehypothecation of debt at the federal level. And the benefit that Japan had when Japan did this was that they had the ability to arbitrage that debt. Right? They could take that money, that negative yielding money, and use it to actually make money in the global market if they were able to arbitrage that debt correctly. You can't do that when you're the global reserve currency, when your sovereign bonds are like the dominant global debt instrument.
Yeah. Puppy, would you like to jump in here?
Yeah. Hey, look, man, our chat room, they don't necessarily come for us, man. So I like to hear the guest speak. No, I'd say, you're absolutely right. And that's what's sort of become the joke about this whole thing with the Federal Reserve and what they will pump up and not let die. How do you lose money in the stock market when you have someone like Boeing, that'll never go away? And that's why you guys, I'm sure, saw the clip. I'm going to butcher his name, but I think it was Chamath. was on there with the guy who goes, "Yeah, let it die." And the anchor's like, "What do you mean let it die? It's Boeing. There's people who's going to lose their jobs." He goes, "Yeah, I know. And guess what? Someone's going to come in and buy it and restructure it and actually turn it into something profitable, not a zombie corporation that's going to get propped up continually."
Yeah. So that's.
Did you guys?
Go ahead.
You guys see that thing about how something like 90-something% of all of the free cash flow of the airlines in like the last couple of years has been used to buy back equity?
Yeah, it's ridiculous.
So Colin talks so often about the liquidation of malinvestment, and this like understanding why this is such an important process of capitalism that we've removed from the situation altogether is what you're like getting at there, Pubby. Heavily or can you comment on that, my friend?
Yeah. So this is a thing that like I explained this a few times like on streams, and I don't think people really get it. There just aren't enough people who like understand the nuances here. But, like when you see these financial institutions, and like in particular like these corporations, like Boeing is a great example, right? What does Boeing do? Like what is the core mission statement of Boeing? Well, it should be to like build airplanes and supply them to demand on the market, right? But most of their business organization is built around like government contracts and like bailouts and like all of these weird financializations of what should be entrepreneurial, productive, profitable processes that are satisfying market demand. But what you're seeing is these companies are turning into financial instruments where executives at the corporate level are recruited based on their ability to financially engineer the asset value of their equity rather than to be able to actually profitably and successfully run the company. And that's why you're seeing companies like Boeing, companies like the airlines, companies like Apple, who in some cases, like in the case of Apple, have hundreds of billions of dollars in cash reserve and are borrowing money in order to take that money and use it to buy back their stock. Like that's insane. Imagine a tech company that produces phones is a financial engineering company at its core. Like they're not interested in creating some radical new technology as much as they are, pumping out the same new phone with a slightly updated hardware and software every few years and forcing people to buy it to keep their finance. Because what they're ultimately doing at the end of the day is satisfying the market demand for sound money, and their financial asset, which is their equity, is a sounder money than our currency.
So heavily armed, I want to ask you on that note, and by the way, shout out to Prentice BTC Pins. I met him last week at a Bitcoin meetup in Orange County. It was his fault I came down there. I totally blame you. So heavily armed clown, you mentioned Apple. When Apple buying Bitcoin to store value and not see it dilute away as ice cubes in the sun?
I don't know, man. I don't know. I think this year has caught a lot of us off guard. I mean, I don't know. Was anybody expecting Elon Musk to drop $1.5 billion into Bitcoin just like on a random day?
I expected 1.4, so he surprised me. Ben, what do you say? When Apple?
Man, I mean that's up to the guys over at Apple, but I certainly think that Elon turned some heads. I think that every single corporation and every single government and every single individual in this world has this store value problem. And we have resorted to using other forms of money to be our store value function of money because we've taken that out of our money. And money should be a store of value first. If you look up the definition of money, it's a store of value, medium of exchange, and unit of account. And when you take that out, it's going to seep into all these other things. And that's what the financialization of the economy that my brother was just commenting on here is that we have turned our financial economy and really our economy as a whole into a method of providing ways to store our value instead of like serving consumer needs through offering goods and services. So yes, I mean, I'm sure that Apple's listening to this Toxic Happy Hour right now because I'm sure that they do on a regular basis. So we'll just make that plea to them now that maybe it's time to start getting off zero, folks. Yeah, I don't have a prediction for you though.
I would absolutely agree.
Go ahead, Pup.
Easy,
You're always good for a bullish statement.
Look, man.
When Apple?
Look, I'll tell you what. honestly, it's crazy how we age in Bitcoin. How long, Sarah only came on board just a few months ago, and you remember in August, I think they dollar cost average in at $11,111 per coin. Obviously, that's gone up since then, but it's insane to think that initial purchase is already quadrupled. When he came in, this is a small company, in most regards. The purchases they had at that time, you only needed another 8 companies total, the size of MicroStrategy, to buy up the annual supply. Not even counting, Grayscale or all these others. What I find interesting was what he put on the map was for every CFO to go into a boardroom and say, "Listen, I'm not crazy. This guy has done it. His money has started to double. I'm not crazy." What you get with Elon Musk is every CFO going in and saying, "Look, Elon Musk did it. We have to do it." Okay. So in a span of just a few months, we went from a guy from there's no way a CFO is going to bring this up to, "Hey, listen, it's sort of legitimate. This guy has done it," to Elon Musk has fucking done it. And when you got Apple, you guys, they have so much cash at hand. Why not throw 10%? They're not going to need it for 10 years. Why not throw cash in there? There's absolutely no reason. And so, yeah, I'm bullish. This is the year of big tech coming in.
I think we will look back on this time period, and I think in retrospect, you will be able to point at Michael Saylor and say that moment was the end of the fringe time period for Bitcoin and the beginning of like the early adopter / mainstream adoption phase of this new technology.
Yeah, I think it's worth pointing out too that Bitcoin is still so small compared to, I mean, like we say, Apple has 200 billion of cash and Bitcoin's worth like 900 billion. And like a lot of us understand this term of like slippage, that if they tried to actually put $200 billion worth of cash, they wouldn't be able to purchase it all because Pubby is not going to sell it. Well, maybe Pubby will sell, but Danish won't sell his
no way, man.
Bitcoin. But
I love you, Ben. I love you.
but the point is that the price is going to go up. So this slippage idea that Apple can't just like allocate half of their stash to Bitcoin because it would like literally go to the moon, right? They have to kind of start slowly dipping their toes in, and it's a process that Bitcoin essentially has to get bigger before it can get bigger, if you will.
Right.
No, absolutely understood that. So I guess it's a year of, and I'm not sure, maybe you guys know this, with publicly traded companies, what percentage can you put in? Andy Edstrom was on with us once, and he had a great point of course, they're not going to come out and just outright tell you we're going all in on Bitcoin, and it'll slowly get in. What's the time frame, or what percentage can a company put in that they don't have to report their Bitcoin purchases?
I think it depends on the charter of the company, doesn't it? Or whether they're public or private.
Sure. It depends on. So like a big problem that a lot of these companies run into is like their board of investors, right? Like Michael Saylor was lucky because he just so happened to be in retention of majority of control of his board, and that's a unique position to have. And I think Preston Pysh has like hammers home a million times. Like the fact, Michael Saylor's position is like a unicorn position, right? Like he's in majority control of his company. He has free cash flow. He had no toxic debt. Like that's like a one in a million these days. That you have a profitable, productive company with cash flow, right? That still has majority control, and they're publicly traded. That's insane, and that's why Michael was able to do what he did, and that's why he's seen his net worth balloon as much as it has in the last few months.
Yeah, how brilliant was that move? 75 basis points, and he gets what? Well, I think he was going to start with 400 million home, but he ended up over 650 to buy more Bitcoin at that rate. It's insane.
Well, Pubby, if I mean, like I said, I know Apple listens to the Toxic Happy Hour, but we were joking on our podcast about this at the nation state level on an episode we did called Checkmate, where we were talking about the same situation playing out. And this is actually an idea I got from Murad, believe it or not, that really the first person to get in kind of wins the game. And it's this kind of whole cat and mouse game of like tipping your toe and because it's kind of scary because you cause all this slippage and then you're gonna run up against those walls. But the same thing I think is going to play out on the nation state level that we're seeing happen on the corporate balance sheet level now. Yeah. And it's funny because we're like, oh, well, who thought Elon Musk would do this? And like, yeah, really, like maybe we're all half joking or maybe half hopiuming like that there's going to happen. But we were all speculating about that last year, and we're speculating about the governments now. And so what's going to happen next, man? It's a really interesting game.
Right. Well, and circle back to what I was saying about financial engineering and asset like equity buybacks and those types of things. When these corporate executives figure out that Michael Saylor's playbook, like look at the price of MicroStrategies, look at the price of MicroStrategies 6 months ago, right? When these corporate executives figure out that the playbook for artificially engineering the equity value of their stock price is rather than buying back stock to buy Bitcoin with treasury reserves, this game is going to change. Like when you see that become the dominant mainstream narrative, like hold the fuck on, because Bitcoin is not ready for that. We are on the verge of a supply crisis.
Bitcoin buybacks, baby. That's funny, Sean. Somebody asked what the name of our podcast is. It's called the Bitcoin Echo Chamber. We haven't been releasing a lot of episodes lately, but that may recommence soon. So stay tuned. Bitcoin Echo Chamber.
And Pubby and I, we saw that void of no content from you guys, and we jumped in and just started pumping out toxic happy hours. We got to take this opportunity until everyone goes back to your content. No, so I just want to say the article that Ben mentioned earlier that Nick Szabo wrote, shelling out of money. I will put that. I got that. Ben was able to multitask during the stream here and sent me the link, and I will put it in the show notes. Like, give me 30 minutes after the stream. It's going to go in the show notes on YouTube. I highly recommend. I haven't read it myself. Toto will go and read it. If you really want to understand Bitcoin, you need to understand money first, because otherwise you just think it's an investment. It's not. You need to understand money to understand that Bitcoin not only is money, but the best money that the world has ever seen. So that's going to go in. I would love to talk to you guys, and because now we established 1971 and basically the removal of any asset that was backing the currency. So what's really important is the effects it had on society. Again, there's a link to your guys' website down below. Amazing graphics, pictures say more than 1,000 words. Lots of really telling stories in those graphs. But if you guys could give us a summary of what has the effect been on society and humanity because of the 1971 default on the international gold debt.
Yeah, we argue a lot of things happen, but I mean it all stems from inflation, really. That's the biggest one. It's the easiest to see, even with the CPI metric, which we all kind of we rag on not being the most accurate thing. Even if you take the CPI metric, one of the first few charts there is just showing the historic CPI over like 200 years or something, and you can just see it just goes absolutely haywire. And when you inflate the money supply, you distort prices, and price signals are really important because it's the method by which we all collaborate, right? Like the tool we use to collaborate as a society on a global scale is the money system. And when you're distorting those prices, you're distorting our collaboration. The other big effect that that's right there in the kind of the beginning of the website is I think that this drives wealth inequality through asset inflation because of the disproportionate access to assets that the wealthy have, not only like literally in direct like means of accessing financial markets that aren't available to folks in developing countries, but also that a wealthy person can hold a larger percentage of their wealth in an illiquid volatile asset versus somebody who's living paycheck to paycheck who needs those liquid dollars so that they can make their payments for the week, that they can't everything they squirrel away is in this melting ice cube, right? So it is a disproportionate system. It stratifies society. It increases the wealth gap, which is one of the biggest issues in society today. Inflation also makes it harder and harder to save money. And like if you're buying a house, you need to have a down payment in the form of fiat cash. So if you're saving that in the bank, right, like to try to get onto the asset inflation train while we're seeing housing prices rise. And that's another part, like huge issue that people are talking about today. And the other probably huge issue is medical care and education, where that's coming from lower interest rates and increased incentives to borrow money, right? So these are all like play into all these other things. But I mean, it goes on and on and on and on.
So yeah, let me jump in real quick on that one because it's funny, the website, what the fuck happened in 1971? It seems always the 90% solution was, Nixon takes us off the gold standard. And as you guys have talked about, there's so many more nuanced things that were going on culturally at that time that it was the perfect storm, if you will. There's two things I'll bring up. One was the expansion of the workforce. Okay, you have now companies that after the women's right movement, you have a workforce that starts expanding. It didn't double right away, of course, but you now have a supply of workers going out into the workforce where, guess what? Salaries obviously can be kept down. Two was the expansion of credit. Up until that point, this would be like, I don't know, was it the old diner's card? You didn't really have credit cards in the early 70s. I remember my parents in the 70s you went to a bank on a Friday to get the cash out you needed for the weekend, and that was it. So when you couple off the gold standard, you got inflation. Now you get a workforce that the number of people going out looking for jobs expands. And oh, by the way, you can start financing things or put things on credit. That is just a perfect storm for me of when you see that chart, any chart, starts to go haywire. One line goes straight, the other one starts to go off the end. I think it's pretty amazing. We have education that used to pay as you go. Now, hell, you can just finance the whole thing. It's absolutely insane what we've turned into.
But I think both of those things you touched on are huge misconceptions that people have, because wasn't that Diners Club card that you talked about? Wasn't that like in the 50s that it first came out?
Yeah.
But then what your point was is that we didn't start using credit cards until the incentives were broken, that you could borrow inflating money and then pay it back with inflated dollars. And the other thing that you mentioned was and people entering the workforce. And this is another huge misconception. People are like, oh, well, that's the reason there was inflation. But that's bullshit, because if you have more people entering the workforce, you should have more people making money and therefore more demand. It should all balance out. That's another lie that they told you to explain away the inflation that is obviously tied to the monetary inflation. Just like Milton Friedman always said, inflation is always and everywhere a monetary phenomenon.
There's because
go ahead.
I just want to say real quick to what Ben said, and sorry, I know you're the guest, heavily armed clown. I'll give the word to you very quickly, but as you said, Ben, the inflation is totally a monetary issue. And I know people hate when I keep bringing it up, but the Price of Tomorrow by Jeff Booth exactly explains that we have in general productivity growth. Products by nature gets cheaper and cheaper, and that way we get richer. But because they keep printing money, currency faster and faster, they create that inflation. And they have told us that it's in our interest to create deflation and destroy our savings. But it's an absolute utter scam. Heavily armed clown. Back to you.
Thank you. Connor Brown wrote a really good article on this like 2 years ago called Bitcoin Has No Intrinsic Value, and That's a Good Thing. And it's one of my favorite articles about Bitcoin because it highlights the distortions created around artificial pricing on commodity values. Like you can think of 100 examples. Housing is a great example, like you guys just mentioned. And a big part of this is the cheap credit bubble, right? Like I just bought a house, with like 2%, 2.5% interest on a 30-year mortgage, and they paid me to buy the house. They literally, I did not have to pay closing costs. They paid me to buy the house. It's absolutely fucking insane. And you think about like the artificial monetary premium placed on some of these commodities that we need to have utility, like houses, like gold, right? Imagine if gold had a fair use value in terms of its utility, and not this monetary premium that's like, outdated and artificial, and that people were just using it to try to like store their wealth horribly.
Yeah.
Sorry, Peter Schiff, I hate to say it, you're losing, dude. Yeah. Imagine if gold had a fair use value price in the market, what that would do, what deflationary effects that would have on like electronics and on jewelry and like on all the things that gold is used for outside of its archaic monetary value. And it's the same with houses, right? Like you have people spending like more money, taking out loans for more money than they make in 30 years to buy homes, which is just a building that they put their family inside of so they don't have to sleep outside. It's insane. And then
how did they pay? How did they?
Sorry, I just wanted to say, like, the only other thing, just to finish up, like what you guys were just talking about, the effects of 1971. The final effect that I see that you guys didn't really mention, that's more of like a social effect, is the effect on society's time preference, right? And you see this all across the board, and we have some charts on our site that kind of highlight this. Like you see it in things like the way it affects family structures, right? The way it affects divorce rates, the way it affects birth rates, the way it affects things like, the way we build buildings, how long they're going to last, what kind of materials we build them out of, how they look. It affects like the decisions that we make on a daily basis. Like, what do I want to study in school? What kind of job do I want to have? What am I going to spend my income on? Like, what types of discretionary things do I purchase? What's my vocabulary like? Like, look at the degradation of our vocabulary. It's been like the last 50 years that it's really gone downhill, and why it's because of the way our time press is tied to the ability to store our energy into the future.
Yeah, thumbs up emoji. That's we're going back. I saw a joke it's pretty funny, but we're going back to hieroglyphics. It's just emoji. Now, you know what? Yeah, I'll tell you an underrated thing no one really talks about is planned obsolescence. The way things are designed, even architecture, anything else, designed to fail within a certain time period. Vehicles, of course, you design them to really get crappy after about 6-7 years when that note has just been paid off. Another story is about Jeep. After the Korean War, World War II, Korean War, all the GIs were coming back, and they were saying, "Man, I had this vehicle in a war, this Jeep. What that damn thing could go through any battle condition you can imagine, and if it broke down, it was easy to fix." And they, of course, got smart and said, "Yeah, we should sell this to the public," and they started to. And then they realized they had a problem. They would sell these Jeeps, and they would never have a return customer because the guys knew how to work on them. And if they could go through a war, of course they can go through any conditions. So literally, this guy wrote. I got to find this article again. He wrote an article how they slowly started putting inferior parts and inferior technology into this, knowing it would break down. You have the car come in for service department. Oh, service department makes more money than selling cars anymore. It's that kind of attitude that is. I mean, it's just a fiat world like that has turned everything to shit. And thank God for Bitcoin.
Well, yeah, and look at the legacy companies in America. Like so many of them, like Ford is a great example. It was built on Henry Ford's ingenuity. Like, go read that man's biography. Like he was an unbelievable, like laissez-faire, like free market, like hardcore, what I would today call like an Austro-libertarian American. And he built his company on value, on providing the consumer value, on satisfying their needs. And look around, like you'll still see Model Ts and Model As today that still work. And they've been fully restored, but like that was because Henry Ford built his legacy on providing value to the customer, not on engineering all of these manipulative ways to try to steal more money from the consumer. Henry Ford was one of the only people who paid his employees more. He gave them a pay raise during the Great Depression because he was more interested in retaining the the more valuable employees that he had, even during the time periods like when there wasn't enough money to go around, so to speak, like seemingly after this government created depression, Henry Ford was giving his employees pay raises during one of the worst financial crises in the entire history of the United States.
My parents my parents gave me a microwave when I first got my first house, and this microwave was from one of their first houses. It was built in the 70s, and it lasted like almost 40 years. It lasted longer than I've been alive. They don't make them like they used to, is the saying that kind of goes along with what you're saying. It's not like we got worse at making things. Right, folks? Like we've been improving material sciences, production process, productivity, all of these things. We've been making it easier to make things cheaper and more reliable over time. What the fuck happened in 1971, guys? What the fuck happened? Why are things getting worse, right? What changed, right? You have to ask yourself.
We can do holograms, but microwaves got worse.
Well, geez, I mean, how many years do you build automobile engines and it still gets the same miles per gallon after 50 years?
But this is another really interesting topic. This is what Eric Weinstein always talks about, is that like there was a stalling in physics breakthroughs in the 1970s, and he blames what is it that he blames specifically, Ben? Like a lack of funding towards like certain aspects of academia that he blames all of society.
The other thing he says is like we've kind of gotten a lot of the low hanging fruit in physics and stuff, and there might be some kind of credence to that. There might be some merit, but
you could have said the same thing in like 1750.
Yeah,
like, oh, we've already harvested all the low hanging fruit, guys. Now that we have water wheels, there's nowhere to go from here.
It goes back to what you were talking about earlier, Heavily Armed Con, is when you were saying the financialization of the economy has made it more profitable to like make a stock that people want to get than to actually provide consumers value. And I think that's the story of where Eric Weinstein misses the boat, is that like these companies don't have to provide value in the form of services and goods. They just like, we'll just make a stock that you want to get and we'll buy it back. And like, that's more valuable to consumers because we have such fucking broken money.
Well, why spend money? Why spend capital on R&D when you can spend capital on buying back stock?
Yeah. So, hey, I want to get your guys' opinion. No, hey, let's go into the whole Robinhood GameStop event, man. That was some crazy shit, and it just underlies underlines the whole situation. How crooked the system is. The profits for me, but not for thee. So, what was your guys' take on all that?
Yeah, there's a lot of nuance here. I'll say my piece really quick because I'm sure Colin has some really, really intelligent shit to say. That really, this entire thing is amplified by the fact that, it's kind of our low time preference thinking. It's also the fact that we don't have a place to store our value. It's a reason that like a lot of the kids my age these days don't really have a lot of hope for the future because it's so hard to buy a house. It's so hard to save for the future. It's hard to secure a good wage that increases by at least 15% each year to keep up with real inflation, right? And that they're all like forced into further and further risk and gambling. And on top of that, the thing that they're gambling on is really just equity investment. That's what the stock market should be. But because it's all been monetized, the real estate's been monetized and the stocks have been monetized, that they have acquired monetary premium, the value above their utility value as an equity investment vehicle. And thus it's magnified all this gambling. It's turned from fundamental investing to literally the stock market is a shitcoin casino.
Yeah. And Saylor talks about that. He goes, my dad is literally have to turns himself into a hedge fund manager, to manage your own cash. It's disgraceful.
It wouldn't matter. These pump and dumps wouldn't matter so much if it weren't. These are these people's retirements. Their savings are stuck in the stock market, and they're looking around like, holy shit! Like this is where all of our money is stored. It's not just an investment vehicle, right?
Yeah, it's because the currency is being diluted so fast. People are forced to buy stocks and buy houses to store their value, and not everyone are good at that. So it's really it's unfair. And I agree with what you said earlier that it's really this destruction of the currency by central banks that creates the wealth inequality, and people blame capitalism, but it's really because of the currency destruction by the central banks. And luckily we have so central banks are not capitalism. They are a crony capitalism. They're essentially like a socialist or communist organization. When the price of money is interest rate, and when you have 5-7 people on a board deciding the price of the most important commodity in any economy, because money makes up one half. When you have a socialist committee deciding the price of that, which is the interest rate, you just have total capital misallocation and destruction of that value that capitalism actually creates for society. And that's also why Jeff Booth says that with deflation, with a sound money, we'll get a world of abundance, and we look forward to that. So how are we going to make that transition?
How are we going to make that transition? Yeah, I mean, if you talk to Jeff, and by the way, he's really good at responding to people, especially if you have something intelligent to say. One of the things that he worries about the most is the transition, because I think he lays out in the book the argument that really this is inevitable, that we can't keep printing our way out of this problem. We can't keep kicking the can down the road. We have to embrace falling prices, right? That is the natural progression of us getting better at making things, right? We have to just embrace that, and the only way we can do that is with the money that you cannot inflate, that you can't print, because we know that temptation from earlier is unavoidable, right? Once there's a temptation there, we will print the money. So you need a money that you can't print more of. But how do we make that transition? I mean, I don't have an answer. I want to spend as much time listening to and talking with Jeff Booth, because he's talking to central bankers. He's talking to these corporate elites, and he's trying to have this conversation. And we as a society need to have this conversation. It's probably the most important conversation we can all have. There's the gradually and suddenly thing. More often than not lately, I've been thinking, man, I hope this happens more gradually, because the suddenly part is the scary part, right?
Well, that is why Clown is heavily armed. Clown. What is your take?
It's true.
So, all right. So, like back in June, I don't know if you guys remember the story about the kid he was like some 20-year-old college student that somehow managed to get like $1 million of leverage on Robinhood and ended up upside down on like some commodity trade or something like that.
Horrific.
And logged into his account and saw that he was negative like $850,000.
So sad.
Some stupid thing. And then he killed himself. Right. So I tweeted back in June. I tweeted the story from Forbes, and I said, "Is it tone deaf for me to say he should have just stacked sats?" And I got a lot. Like, people were fucking pissed at me for saying that. They were like sending me messages and being like, "I can't believe you would say that. How insensitive." I'm serious. Like, I meant it. Like, how many of our problems in this society could have been avoided had this kid not felt desperate enough to try to pursue $1 million of leverage at the age of 20 and gambling in markets that he obviously didn't understand, to try to make a fortune at a young enough age that he wouldn't feel like he's a slave in our financial system. How much better for him would it have been if he had just had the proper understanding and education of our monetary system to know that all he had to do if he wanted to be wealthy was stack sats? If he had been buying Bitcoin for the last 3 years, today he'd have enough money to probably not have to work for the next 10 years and just figure out whatever he wanted to do from there. Or, like to continue to work and say, like, I'm just going to keep saving sats until I don't have to work another day of my life. Like, legitimately, I don't think what I said tone deaf. I don't think that what I said was insensitive. I think that what I'm offering is a solution, because the problem is with the monetary system. And you wanted us to talk about like the whole Robinhood and GameStop thing. I have long been a hyper critic of Robinhood, because I think Robinhood is a rotten business. Because I know what Robinhood's business model is. They prey on the young, unsophisticated investor who sees, hey, I can get commission-free trading. That's a hell of a deal. I'm going to go for that. But where Robinhood takes advantage of you is in the order flow. Where Robinhood, they make their money on arbitraging your trade between when you hit buy or sell and when it actually executes and clears at the clearing house level. trading fees are more than just the way exchanges, like stock exchanges and brokerages stay in business. They protect you as a consumer. They protect your order flow as a consumer, as a trader, as an investor. And Robinhood knows, and this was brought to light during the whole GameStop escapade when they halted trading. You have no protection when you don't pay your brokerage anything to be able to trade equities on their platform.
Can I just tie in a few things really quickly? He just mentioned education and why that's so important. And somebody just posted in the chat, and I'm sorry, I missed who it was.
Yeah.
That quote by Henry Ford, who was also mentioned recently. It's well enough that the people of the nation do not understand our banking and monetary system. For if they did, I believe there would be a revolution before tomorrow morning. This education, this is what you guys are doing. This is what we're doing. It's what so many Bitcoiners are doing. Spread this message. Let people understand these fundamentals because they're so crucial.
I knew that quote. I didn't have it in front of me at the time, but I'm glad someone put it in there because it's absolutely true. One required reading was always The Creature from Jekyll Island. Once you read that, your view of the government and the Federal Reserve will never be the same again. It opens your eyes to so many things. You have no excuses. So absolutely right. The way the money's created, the way it's controlled. We've been slaves for how many years, and we finally have a token of freedom in the form of Bitcoin, man. We got a way out, and I love it.
Bullish.
So people in the chat are talking about sovereign individual. I just want to say real quick that I think sovereign individual is overrated. I think it's a rehash of Rothbard and Tim May. So there's my unpopular opinion.
Rehash of who? Can you say that again? You got interrupted there slightly.
Rothbard. So most people have never read any Rothbard. I know that to be true. It's the same shit with Mises, right? Like I get in arguments with these people on Twitter all the time, and they're like, "Oh, Austrian economics is stupid." I'm like, "No, you just haven't ever actually read it." And they're like, "No, I've read Mises. I've read Rothbard. It's dumb." I'm like, "No, either you didn't read it at all, or you didn't understand it." But sovereign individual is just basically like a watered down version of all of Rothbard's writings and Tim May's writings on cypherpunk. Go read the original sources. Go read it. Go read a treatise. Nobody reads treatises anymore.
I was laughing because once you discover Bitcoin, and I think there's by individuals around the world, there's something intuitive in every Bitcoiner. There's this common thing that we all have in common. When you recognize something and it's the truth, you go to. I never knew anything about Austria. I never heard the term Austrian economics until I bought Bitcoin and started going down that rabbit hole. But I'm at the point where it's like, damn, I'd rather just shit post and meme than read something I'm already convinced of.
Yeah. Can we really recommend some titles really quickly?
Of course.
Oh yeah, go for it.
The place to start is probably Economics in One Lesson by Henry Hazlitt. A really short read, if you have high time preference, is What Has Government Done to Our Money? That's only 50 pages long. If you have really low time preference, Human Action, right? Colin, you want to throw some in? My last favorite is Ethics of Money Production. So good.
No, I said this, and I mean it. I say it a little bit tongue-in-cheek, but I mean it. Nobody reads treatises anymore. It used to be that if you wanted to understand a comprehensive brick by brick from the bottom up foundational understanding of any topic, you would go and read a treatise. Nobody reads treatises anymore. They read 150 page watered down pass down of a pass down of a pass down of a pass down whose professor once read a treatise, and they're writing their rehypothecation of that professor's understanding of the treatise. And that's what people read today, and it's the type of shit that you see in the New York Times bestsellers list. It's all garbage. And if you really want to understand economics, go read Human Action. It's 1,000 pages long, and go read Man, Economy, and State by Rothbard. It's 1,000 pages long. Yes, I know it's a slog. Yes, I know it's uncomfortable. Yes, I know sometimes it's boring. But if you really want to understand this topic, you have to dig through the material of the foundational minds of understanding these topics. Go read Wealth of Nations by Adam Smith. It's boring as hell, and most of it's outdated. But it's fucking really interesting, and if you want a foundational understanding, that's what you have to do.
And a special shout out to iPencil that I talk about in almost every podcast I'm on. I see Sean posted that as well.
Yeah, man. Go on it, man. You want to go? iPencil?
Oh yeah, I love talking about this. I'm gonna do this in about an hour. I'm gonna do this in Brazilian Portuguese because I'm going on Bitcoinheiros video podcast for the Brazilian guys. So I'm gonna try to talk. So I'll say it in English today for you guys. So remember to try to remind myself of it. This is the idea that all prices are emergent and you can't set prices, and that the example that they give is that nobody in the world knows how to make a pencil. Milton Friedman gave the talk, but it's originally an essay called I Pencil. But Milton Friedman really made it so good because he says nobody in the world knows how to make a pencil. Not a single person. And it sounds absurd when you think about it. But when you just start with the wood, right? You need the wood. To get the wood, you have to go to the Northwest and cut down a large tree. Well, how do you cut down a tree? You need a saw. Well, how do you make a saw? You need to make the saw. So you have to, first you have to go get some ore, and then you have to mine the ore, and then refine the ore, and then smelt, and then cut and get the saw and put the wood handle on that. Oh, you need the wood handle. Crap, you had to go get another saw. That's just the wood. And then you get to the metal band around the tip, the rubber, that comes from somewhere else in the world. And the graphite, I don't even know how graphite is made. And there's the paint that's on it, right? And then the markings, and then all the machine shop tools to create this thing, all for 5 cents. And it's all these people collaborating around the world, and there's no one person telling all these people to do all these things. The only thing that's telling these people to create these services, to create these products and put them on the market is the price system itself. And it's all them bidding for their time and their value and their services and finding the price that somebody will pay, and that moving that price until somebody will take it. That is the emergent price system, right?
Yeah. Who wants to follow that rant? Jesus, that's good.
If that's too much for you guys, go pick up the Tuttle Twins books, right, and read the iPencil version of the Tuttle Twins, which it's written for kids, right? So go pick Tuttle Twins book series, especially if you have kids, and read them to your kids because it'll teach you what's his name, the economist who wrote That Which Is Unseen.
Oh, Bastiat.
Bastiat, yeah, it'll teach you Bastiat's law. It'll teach you iPencil. It'll teach you Creature from Jekyll Island. But it's in kids books versions. They're great. So if you really have that high time preference, go read the children's books versions of all of this stuff, and you'll at least be on the right track to understanding how the world actually works.
So I have a question here. Oh, go ahead.
I was just going to say that the Tuttle Twins that Heavily Cloud just mentioned, Marty's Owl wrote Mises Pieces. I think the Tuttle Twins is probably the best example of Mises Pieces you can get. All right, sorry, Pubby.
No worries. So we talked about the 70s a bit. We're coming up to today. What I'm interested as we're moving forward, between Saylor and Elon Musk. The one thing that changed for me when people started a couple of years ago, it was about this hyper Bitcoinization, store value, medium of exchange, and then ultimately a unit of account. Saylor sort of fucked everything up in a way. He's holding that shit for 100 years, and other corporations may too. What if Bitcoin is only a store value for many people, and no one wants to get rid of it for 100 years? Have you guys thought about this? Did your thought process change after you came out and said this? And will other corporations and governments feel the same?
You want to take this one, Clown?
I'm not worried about that at all. I mean, because at a certain it's just insane. It's kind of the same argument that people make about deflation. They're like, if your money goes up 5% in value per year, then no one's ever going to buy anything. It's just stupid. If we get to the point where people demand Bitcoin in exchange for goods and services, or they demand a Bitcoin equivalent value in fiat for goods and services based on the way that Bitcoin is appreciating, well, it doesn't matter. It's just a moot point. Of course, if you're an individual, this all goes back to human action, right? You have to read human action. You have to understand that everybody acts rationally all the time, 24/7. All humans do this 365 days a year. You act rationally to solve your problems, right? To make your life better. So like and everybody does it differently. It's all done subjectively by the acting man, individually, on his own basis, all across time and space. And you cannot predict how any individual would ever act because it's always based on his own subjective preferences. To assume that like, oh, people aren't going to buy chairs or food or clothes or houses because their money is too valuable and they want to hold on to it, it's just insane. They'll buy what they want, when they want it, with whatever money they have available, with whatever is on demand at the market. So like, if people expect to get paid in Bitcoin for the goods and services they provide, and the consumers subjectively value those goods and services more than the money that they have on hand, well, then they're going to spend it. And if not, well, that's their choice because they're individuals and it's a voluntary marketplace.
Yeah, you see people say stuff like this all the time, and it just shows they have no idea what the hell money is, and that's not their fault. It's the artifact of the system that we're in. When they're like, "Oh, well, no, I think Bitcoin is only going to be a good store of value." That means you have no idea what money is because money is supposed to be a store of value. The only reason we don't have store of value in our money today is because you can print it infinitely, a la Neil Kashkari from the Federal Reserve. Right? If you didn't have that, we would have store value in our money. And we wouldn't need to turn to the stock market. We wouldn't need to turn to houses and gold and all these other things just to preserve our wealth. It would already be inherent in the money. And the fact that people don't have the foresight to see that is an artifact of that.
And legal tender laws force people to accept paper for no reason other than to protect government seniorage.
Heavily Armed Clown and Ben, what you guys are saying is you're not worried that Bitcoin will not be used as money. Personally, I do believe Bitcoin will be used as money. This is where I've been trying to tell this to Pubby a long time, but I'm doing a really poor job of explaining it, I guess, since he's still talking about Bitcoin.
Anders, let me jump in here, because what I'm trying to explain is there are the amount of money that will come in under, I think, which is game theory, and we'll talk about maybe Plan B and stock to flow. The amount of money coming in and the use case has changed dramatically this year. The use case for many corporations, many countries, is to hold on to an asset, which, let's be honest, we got a halving every 210,000 blocks, goes up in value. You're going to have people that don't necessarily need to use it as a means of exchange. I think that just puts the value, it's going to skyrocket. That's how valuable Bitcoin is going to become, because they're not going to use it to buy coffee right now. And that's fine. That's absolutely fine. That's the nature of it.
The short response here is that there's two things that are preventing people from spending their money mostly right now. Their Bitcoin, I mean, the real money.
Yes.
Is one, the potential gains in value from Bitcoin acquiring a monetary premium and becoming a money, becoming a store of value, whatever you want to call it. As people get on, the price should rise, as Matt Odell kind of says. The other thing that's mostly preventing, specifically Americans, but a lot of the other countries that follow suit, is the fact that every single spend is a taxable event, right? So these two, the first thing is easily solved by the fact that everybody adopts Bitcoin, and then it doesn't have this asymmetric potential, like massive upside gain, like of 10 or 100x here. Even from here, if you get to like world store value market cap is in the maybe hundreds of trillions of dollars. Once it gets around there, there's not this massive potential upside. It's just like, maybe 3 or 4% per year as we kind of get better at making things. And the other side of it is once it gets to that size, having this stupid tax system where every single spend is a taxable event would be completely untenable and would go away. And then we would have nothing preventing us from spending our Bitcoin. In fact, just much the opposite. All the tools that are being built around Bitcoin, the streaming money that you can see already happening on Sphinx Chat, tools that will move your money around more quickly and in more programmatic ways than you can even possibly imagine today are coming, that will make you be able to spend your Bitcoin in ways you can't imagine at all. So I do think it's marred in misunderstanding. I really do.
Yeah, taxes are a huge thing for me. So, geez, to be, at least you hold your Bitcoin for a year, you're only getting the capital gains, which that's going to get ridiculous. Do you guys foresee a time that they've released a tax effort, or countries, the countries will be competing for Bitcoiners to come bring your Bitcoin here, no taxes? I'm waiting for that.
Absolutely.
So 401ks are a scam. Okay. And here's why. Because if you're married and have no job, you can get up to $80,000 $80,000 a year in capital gains with no taxes. $80,000 a year. Yeah, maybe in like another 5 years that might not sound like that much, but like right now, that you can live tax-free off of your Bitcoin indefinitely.
Yeah.
Under that rule, like we already have it. Like, and people are so brainwashed by the 401k system. It's like they think, oh, I've got to put all my money away into this illiquid store of value that I can draw on once I'm retired, once I've worked long enough on the farm. Like, I always think back to like Sir, the horse from Animal Farm, who like, I have to work harder. I must work harder, and then he ends up going to the glue factory instead of the retirement pasture. 401ks are a scam to force you to put your money into illiquid financial engineering Ponzi's rather than putting it into things that you think are a more prudent financial decision in the short term, and being able to access that capital when you need it in your life when it actually matters. So like if you have all your money in Bitcoin right now instead of in a 401k, you can pull out $80,000 a year of that, excluding other income, like assuming you have no other income, and live off of it tax-free. That's insane. That's a lot of money.
At what age is this, did you say?
Like that's like a tax rule, like at any age.
So you can pull. Wait, I'm missing something here, because my understanding was anything you pulled out of Bitcoin that you had invested earlier, anything over here you still had to pay capital gains. But you're talking you're just talking about a 401k, right?
If you have no. If you have no income, right? Assuming
no
you have
income,
no job,
right? Yeah,
like you're married and you have no job, so you're dual reporting on your taxes. You can
nice.
You can take in up to $80,000 in capital gains on a yearly basis if you have no income and not have to owe any taxes.
Beautiful.
People don't know this. Like, of course they don't know this, because what's the incentive for them to know that? They could set themselves free from being a tax slave.
Yeah.
Not financial advice.
Oh
yeah, definitely.
Not a lot of Bitcoin
advice. Yeah. Definitely don't cash out equity from your home and use it to go buy Bitcoin. Don't do that. That would be terrible. Don't.
Yeah.
That reminds me, Anders. I'll give you the word in a second, but I just got a call. We had to hear from our sponsors. And back to you, Anders.
Yeah, so we are down to having the hardcore toxic happy hour viewers left. I think we're all 35 of them. So now we've kind of discussed why fiat currency is a scam and the terrible effects it has on or have on society. Let's talk about your guys' expectations for the bull run that we're in right now. Bitcoin is around 48,700 or so. What do you guys expect? I mean, things have kind of been getting out of hand with MicroStrategy. Tesla came out of, I wouldn't say out of nowhere, but no one expected Tesla to be this early. Preston Pish back in January said that it wouldn't be likely that they're next because they don't necessarily have a lot of cash flow. But here come Tesla with 1.5 billion. So what's your expectation, guys?
I think the number is going to go up.
We love that technology.
There's this whole stock to flow chart and all these rainbow charts and all these things, but you can't predict human action, man. You just can't predict human action. You guys keep trying to get us to get these predictions going out, and we like to play it pretty close to the chest because you have no idea. I mean, I can throw out numbers and be like, oh, it'll probably go up to 300K and then fall back to 90K or whatever, or it could go up to 100K and fall. But it's just like we're throwing darts at a dartboard, man. Numbers gonna go up. The fundamentals aren't gonna change. Learn about Bitcoin, learn about the history of money, and stack those sats, dude.
Amen. And what about you, Heavily Armed Clown? Is that what's your answer? What's your expectations? Are they also number go up and that's it, or?
Yeah, I would taper my expectations in a similar vein to Ben, because like I don't do technical analysis and I don't make it my business to try to predict prices in the short term and the medium term. I do know that number will go up because that's how, because of the incentives and because of the way that Bitcoin is structured. I know number will continue to go up, and I actually think number will go up faster than anyone aspects. And I've been saying this for a long time. I've been saying that everybody, even the people who understand Bitcoin the most, are underestimating its potential value by orders of magnitude. I really do believe that. I think that like the float is so tight on this, and the demand will be so large that like even Bitcoin Tina is too bearish. Like you have no idea how high the price on this thing can go and how fast it will get there. And so my prediction, if you really want a prediction, my prediction is that 2018 bear market was the last major drawdown in Bitcoin price that we will ever see. I don't think it's going to happen again.
I agree.
Hey,
I agree to that.
Oh, listen, I'll bring up the stake bet. Anders and me and Greg Zaj
Nobody want to hear about the stake bet.
Oh, they do. They do. This is Anders the Bear thought that this may not be the market, so he thought a 40% retracement for me or 50% with Greg. But I would say, at the end of the day, here we go, man. This is a hockey stick, and we started at the tip of the blade. Right now, we're entering the end of the blade before we go up the entire shaft, because this is going to be violent, and it's going to be quick, man. It's going to be quick. And right now, you should be just accumulating and waiting. Accumulating, and that's it, man.
Be real fucking careful if you think that you're smarter than the market, and you're going to try to time this thing, and you're going to hop out at 500% or 600% gain or whatever, and then jump back in when it falls back down. Yeah, you're going to get fucking crushed. Mm-hmm. You're going to end up holding the bag on the useless pieces of paper that they're printing trillions of right now every single day.
So I'm gonna have to say that my expectations have totally changed over the last half year, seeing how steep this bull run is. So I used to think that this was a great opportunity, but I'm absolutely becoming more and more bullish. And I totally agree with you, Heavily Armed Clown, that we have seen the last major bear market. My expectation now for this halving is we will get a slap in the face at one stage. In January we saw 31%. Like as number keeps going up, we'll get more and more noob investors in that don't know that they're buying the best money the world has ever seen, that do get scared when there is a sharp correction. So I think we will still get that slap across the face. I don't know if it'll be 40 or 50%. And then I believe we go into hyper Bitcoinization in which basically means, you know, number go up very, very fast. Fiat currencies hyperinflate very fast. Well, that is, I guess, the definition of hyperinflation. I think we'll see both in this cycle. A slap in the face. It's not going to go near 80%. It's not going to go to 70%. It will be fairly quick. Who knows? 1 month, 2 months, 3 months, 4 months, and then we go straight up to the moon, and then Mars, and then interstellar, and then intergalactic.
Anders, let me jump in on this one real quick, because what I think is fascinating is from, I think it was May, June, I think we're 8,000, 9,000. And I remember this for 2 months because I made memes about it. To try that 10,000 barrier was massive to try to get back up there. And we had 2 months of trying to get there. That mental hurdle was real, man. And we jumped there. So I think that as we go forward, there's no pullback anymore because everything is consolidating. After 20, with the 30 up to 40, listen, man, there's going to be a slight pullback. But every time we have seen a pullback since June, I mean, we've seen some major dumps onto the market that were snapped up within minutes. I mean, half of them were Michael Saylor, of course. However, there's other people that are picking it up. I think those days of 30, 40% dumps are over.
But we just saw 31% in January, Puppy, and this is only on the way to, like, we're only getting steeper and steeper. We saw 31%. Don't say 40% can't happen.
Yeah, I mean,
I'm sorry. We only doubled our money or triple our money then at 30%.
No, that's irrelevant. That's
numbers.
not what we're talking about. Ben has something to say. Ben,
Yep.
jump in.
Yep. Sorry.
I'll be slightly contrarian here. I'm not actually trying to take away from the sentiment or really even the fundamentals that you guys are talking about, but I will pose just a slightly counterpoint example. And this is something I heard Saifedean talking about recently. One, that hyperinflation doesn't necessarily need to happen for a Bitcoinization to happen. Because as people Bitcoinize, they can pay off their fiat loans, and that's destruction of credit. And we know that most money today is printed through the form of credit. So as you pay off those loans, you destroy money and thus destroy the supply of fiat. So it can kind of go this way, right? And the other thing that I'd mentioned that he also pointed out, which is really interesting, and I almost hear nobody talk about this, is that as the price of Bitcoin rises, the nominal amount of Bitcoin that is mined every 10 minutes doesn't change, but the price that it's worth does change. So if we go from here to 100 grand, right? Or even if you go from 20 to where we are now there needs to be more buy pressure to support the constant selling that we know miners have to sell to pay for their costs of capital and their cost of electricity, their input costs. So as the price rises, there needs to be that commensurate rise in like constant stacking sats demand. So that's why you still see these kind of machinations, right? It's a natural form part of the market. So it's don't get discouraged if you still see those and these theses don't play out. I'm not saying that they can't play out, but that's just a natural part of the system.
Well, that makes a good point. That makes a good point because Bitcoin is deflationary, not just in the sense that it's monetarily deflationary, like there's less of it every year. It has deflationary effects, like economically, like across society. Like it's sucking up capital and it's driving down. It's essentially sucking up fiat, is what it's doing. I call Bitcoin a black hole, and it's sucking everything up into it, and it's absorbing that monetary premium.
Question. Listen, man, this is a great segue here too. And you guys, I'm sure you have your favorite podcasts and folks you follow on Twitter. A quick shout out there to Ben. Daniel Prince is a good friend of ours. He's always supportive of what we do. And I went back and I listened to all the stuff you guys did, but sometimes when you go back, it's cool to listen to other podcasts you've done a while ago under the guise of the new intelligence you have learned that year. What I found fascinating was you called out, and this is really cool on your part. You said, "Hey, Princey, basically, do you know Andy Edstrom? Because he's really underfollowed. Only has 100 people there." I felt, and I'll tell you what, and I had listened to that the first time. We didn't know Andy then. We know Andy now, but you were absolutely spot on with that call when it came to that. So I just want to give you a shout out there.
You want to know who found Andy Edstrom? It was my cohort over here. I believe Heavily Armed Clown discovered Andy Edstrom, and we were trying to spread the word. But yeah, that just to kind of cap off that story, Pubby. Daniel Prince awesome. Cold DM'd me. I think right before the podcast really launched, and he said, "Hey, will you come on my podcast and talk about WTF happened in 1971?" I'd never heard of him, know who he was. I was just like, "Sure, yeah, let's have a talk." And I think I was like the second or third guest or something like that. And obviously he's big now. Yeah. So, but yeah, the props go to Clown on that one. I was just spreading the good word.
We're just whores. Like we will literally do podcasts with anybody at any time. Like you have 15 subscribers
obviously
on YouTube, sign me up. I'll be there tomorrow. Like I will spread the good word. Like whatever it takes. Like no, Andy sent me, I'm ashamed to admit this. Andy sent me 4 cold emails trying to get me to read his book. And you have to understand, like you guys know, like you guys probably know, if you run like a podcast or like a show about Bitcoin, you get scammy, shitty ass emails all day long. Like you end up on these subscriber lists and like these freaking media marketing managers emailing you all day long, like trying to get you to show these ICOs. And like 90% of your emails are garbage. They're just like hot spam garbage. Andy emailed me 4 times before I took him seriously, and I was like, "Man, this guy is like really serious about this book." I was the first Bitcoin podcaster that had Andy on his show and gave him the time of day. I was like, "You know what? I'm going to take a chance on this guy. I ordered his book. He offered to send me his book for free. To Andy's credit, he offered to send me a free copy of his book. I'm like, no, I'm going to order this off Amazon. I'm going to read it. I read it. Yeah. I was like, this is legit. This guy is serious. Like, this is legit. I'm gonna make this guy famous. And I got him started, and like I started retweeting him and tagging like, you know, some of the bigger names in Bitcoin and be like, get this guy press, get this guy airtime. And now he's a superstar, and I love it. Like I love it. He deserves it. It was totally all on his own merit. I was just like a stepping stone for him, and I love it. I love being able to do that for people. He deserves it.
That he is. He's actually. Yep. Go ahead.
No, I just want to say, Heavily Armed Clown, we have a question from Sean Stacking asking, when was this? And then we'll go to Puppy.
If you search the Bitcoin Echo Chamber pod for Andy Edstrom, you can find it.
Give me a second. I'll pull it up. I'll tell you exactly when it was.
So while you pull it up, Puppy, it's great. We see just your eyes and your forehead. Is awesome.
Yeah, I was going to say, is this how we're supposed to do it, guys? Is it hi? Yeah.
Yep.
Is this the way we do it on this podcast?
Hey,
Puppy, you wanted to say it is, Ben. Yeah.
Oh, okay. I've been doing it wrong the whole time.
Yeah. Ben has pretty eyes, and now to Puppy.
So I had Andy on my show on January 15th of 2020. This was like before anybody knew who this dude was, and like hardly anybody listened to the show. But all that mattered was that like I kept retweeting Andy and being like, follow Andy, like pay attention to Andy, and then like from there, like the merits of his work, because he poured his heart and soul into that book, like, and from there the merits of his book made itself obvious, and he just like picked up steam and snowballed.
Yeah, I was curious, but when he was with it was great. Obviously the book is fantastic. His views are great, and I was asking him, I said, you know,
sorry, I don't mean to cut you off. Andy was the person who predicted corporates putting Bitcoin on their balance sheet.
Absolutely.
Like Andy is phenomenal. Like he is a market genius. Like truthfully.
Yep. Listen,
we had him on the show, and it was a blast. We had him on in January, and I loved him even more after we had him on the show because he was so awesome to hang out with. And I recommend people go back and find the episode of Andy Edstrom. It was awesome.
Yeah, the thing with Andy, man, he is so personable. Especially, you know, when you have him in a chat, the guy is fucking nails. And I joked with him because at the time I was laughing because we could talk. You know, you have like the father-son duo of Peter Schiff and Spencer Schiff, and I asked him, you know, hey, when you found Bitcoin, because you know he's working for his dad at the time, how did your dad respond to this? Did he think it was like this crazy idea? And he said no, his dad was cool with it. His dad was cool with Bitcoin from the beginning.
Yeah, and Andy wrote that book like not to make money. In fact, like he lost a lot of money, and like he put a lot of money into making the book because that wasn't his goal. Maybe he's recouped that now, and I hope he has. But like he was like, no, his point was to get this word out. But I had to call out Sean again. Sean with the fire comment today. Imagine a world where Heavily Armed Clown didn't read his book.
I almost didn't. Seriously, no, like, because I get so many spam emails from like these bullshit marketers that are like, oh, hello, I see that you are in the realm of cryptocurrency and blockchain podcasts, and I would like to introduce you to my cohort who has produced. Like, I'm just like, what the fuck is this? This is bullshit. Like, ask Ben. I send you Ben all the time. It's fucking
It's like that meme
terrible.
where it's like that meme where what's his face? He comes in the class and he's like, "Hello, fellow children." Right? It's like these people like, I see you're also into cryptocurrency. Let us tell you about our shitcoin, and we're like we just ignore them.
And this like fuels a lot of my tweets. Like one time I tweeted that I would rather have the guy who spent the last 2 years studying Rothbard and learning C+ in his parents' basement than the $1 million cryptocurrency hedge fund managers on my show. And I meant it. Like I was serious. Like, yeah, get those people on my show. How do I find them? Because they're not emailing me. It's the other side that's emailing me.
Agreed.
All right, boys, I do have a hard stop soon. Like in 10 minutes. So
yeah, so I mean,
we got 10 minutes.
We can let you go anytime. I don't know if Heavily Armed Clown is down to hang a little bit more. I'm really enjoying the conversation, and it's been awesome to have you guys on. Honestly, we haven't spoken before. We've only been on Twitter, And yeah, I really love the depth of knowledge and everything you bring here. I love it. It's absolutely been great. So Ben, I don't know if you want to take this opportunity to do some mentions or shout outs or plugs or whatever. Let's hear it from you. And again, I just want to say to everyone, we have the Twitter accounts of all of us down below. So go give Ben and Heavily Armed Clown a follow for more intelligent content, really. And we have the website. WTF happened in 1971.
Oh, 70. Okay, yes, good. I got the year right. Yeah, no, I don't have anything specific to shill. Obviously, buy Andy's book. Obviously, watch Toxic Happy Hour. And definitely reach out to me if you ever want to have a chat. Like, I got nothing else. Really appreciate the time here. If you guys are gonna keep hanging, I will just drop out. Clown, are you gonna stick around a little bit?
Yeah, I'll hang around.
Okay, well then I'll bid you guys
My
adieu.
hourly rate is really cheap.
Appreciate you guys having me on. Thank you so much.
Thanks a lot, Ben, man. Really appreciate
Thank you, brother.
Peace.
Cheers, baby.
All right, peace to the audience too. Thanks, guys.
All right, man.
All right. There goes Ben, and therefore
Finally.
they're also. I need to take this opportunity to reset my notes. So you guys get full screen time and speak time now. Enjoy it.
No, man, this one's an easy. Yeah. So, God, where are we heading? This is, from the 70s, 80s, 90s, early thought. I lived it all, man. I've lived it all. But, man, this is a new frontier. This is a new area that not many people are ready for.
What was the last book you read, Pubby?
What's up?
What was the last book you read?
Oh, actually, I can show you right now. Hang on. I'm halfway through it.
Heinlein. Oh, okay.
Yeah.
Oh, it's Michael Saylor's favorite book.
But you know what's funny about that story? We had been on lockdown in April. Not lockdown, but the first time I couldn't go to work. And I said, well, I need something to do. I ordered like all these Bitcoin books, all this shit. And I had ordered this from a recommendation of a friend before I heard Michael Saylor mention it. So I've had this on the shelf, but it was going down in order. Yeah, absolutely. After he had recommended it, I'm like, dear God, I mean, Bitcoin to me, this is fantastic, because you talk about coming full circle. The book I ordered 5 months ago, Michael Saylor now endorsed as his own. So yeah, that's what I'm reading. The ones that I've always loved, things from Tolstoy are very good. Not just his regular, the War and Peace kind of work. Later in life, he became a Christian at the end of his life, but tried to live it out the entire, Sermon on the Mount thing, and it didn't end well. He was fascinating, but yes, this one here, quite good. Oh, hey,
I heard Michael Saylor talking about that book, and I was like, I added it to my list of 200 books that I intend to read.
I know.
At some point.
Like you say, get in line, man. I mean, you have time for making memes, reading books, watching podcasts. Only so much time in a day.
And watching the Bitcoin price. I do.
Yeah,
I spend a lot of time just staring at Clark Moody's dashboard.
I can't tell you the last time I even looked at the price, because honestly, I'm like I got a 10-year plan.
I don't know how you do it.
I hear about it. No, I hear about it, so I'll jump on like, oh yeah, it's jumping up, but because I truly believe in that, like, this is it. It's going.
I'm with you.
Skyrocket.
I think I just have like a high time preference, and I'm like, how much money am I worth this morning? It helps me drink my coffee. It helps the coffee go down.
Yeah, I mean, number graph technology is, I mean, it's useful, right? So we can say it's, look, that's what I keep saying, that looking at the price of Bitcoin denominated in dollars, it's not because we're interested in dirty fiat. It's because it's a measurement for the, how far we are in the adoption of Bitcoin.
It's a measurement for how right I am.
That too.
Yeah,
that's exactly what it is. It's like
same thing. Yeah,
all we're doing is proving every naysayer and every member of our friends and family who told us we were stupid. You know, we're proving them wrong, like one day at a time, $1 at a time.
It's funny you mention that. There's a man. I had a friend. I hadn't spoken to him in a couple of years, and I had to call him for. I'm trying to think of the reason. It was work related, and I forgot that I told him about Bitcoin almost 3 years ago. He goes, "Man, I think about you every day. I see these prices," and I'm like, "What are you talking about?" He goes, "You told me about Bitcoin," and then it clicked that I told him about Bitcoin. He goes, "You were right, man. You were right. I'm sorry. You were right."
So one of my prized possessions is a plaque. It's like a plaque in the shape of a Bitcoin with like my name inscribed on it, and it was a going away gift from my coworkers, where I was working back in from 2016 to 2018. And the reason they got me this plaque was because I tried to convince everybody that I worked with that the best thing for them to do was to buy Bitcoin, and they thought I was the dumbest motherfucker. Like, they made fun of me so much, like all the time. And so that was like their going away gift to me, was this plaque in the shape of a Bitcoin, and it was like a gag gift. It was like to make fun of me, like, "Ha, you're so stupid. Here's your Bitcoin.
Awesome.
Like, go on your way." That plaque is my prized possession because the price of Bitcoin was like $6,000 in 2017.
Yep. Yeah, frame that motherfucker. Frame it and put it above the entrance to your new citadel.
I love it.
Heavily on clown. What do you do on a daily basis for a living?
I'm not gonna say, but like
as I dox you. What the fuck, man?
Yeah, no. One day.
No, dude.
I'll tell the story.
Okay.
But like that day is not today, unfortunately. You guys.
No, that's fine.
Maybe I've already promised the exclusive reveal to Rollo. Do you know Rollo McFlugel?
Oh yes,
He's got like a picture
yes.
of like a monkey as his avatar. So yep. I already promised him the exclusive reveal, but I can give you guys the follow up if you want.
Awesome. Yeah, we'll take that. No, I'm not asking anyone to dox themselves, Puppy. What are you even thinking? I'm just, asking, like, it's in general, like, do you work in theme parks? Do you work with IT? Do you work with security? Are you I don't know. But it's totally fair. If you don't want to share it, that's cool. I'm not trying to dox you, man.
I can't really get into it without like making it totally obvious.
Okay, that's cool. That's fair enough. All right, so you are Satoshi Nakamoto. Fair enough. We got it. So what's your favorite? That's a question we often get in the chat. What's your favorite meme of the Bitcoin memes? We have so many. Number go up. We have 615. We have Bitcoin fixes this. And anything from Bitcoin Twitter. What's your favorite meme?
This is gentleman.
Sorry.
So it's like this obscure meme from the Bitcoin Reddit, and there was like, so you know how like hodl is just a misspelling of hold. So
right.
This is gentleman is a misspelling of this is it gentleman, but it became like a meme because some guy accidentally left out the it, and he just said this is gentleman, and he was like posting a picture of the price or something like that. And this was like years ago. So now the meme on the Bitcoin Reddit is this is gentleman, and he posts like a picture of like a dapper gentleman with like a monocle.
This gentleman, nice.
This is gentleman.
Like it. This is gentleman.
Mm-hmm.
Fair enough.
Very obscure. I'm sorry that I made it so obscure, but that's my personally favorite meme.
I love it. Puppy, you want to say something? Go ahead.
No, listen, man. We got the best memers in the world, just lighting up in the chat room. We got to bring this into mainstream Bitcoin. This is gentleman. Monocle and all. Let's do it.
Yeah, this is
So
gentlemen.
I'll post a photo in the chat for you so you can see it in all its glory.
Yeah. Oh, BTC Moon guy bragging. Classic meme. Like he's been there.
He knows. He knows.
Yeah. Oh, yeah. We'll see.
There's sometimes when I want to throw a chat on the screen, exactly a new chat comes on and it moves up, and like I put something that I wasn't intending. Anyways, so what else? What else is going on for you, heavily armed clown? We never spoke about what you arm yourself with. You are a heavily armed clown, so what are you strapping?
So my personal go-to weapon would be the M4.
M4 is fantastic.
I love that platform, man. That is just a phenomenal weapon. It's so
Can I
easy
tell you
to
my
use.
yeah? Can
Go
I tell
ahead.
you my M4 story? Yeah.
Yeah.
Listen, I had the opportunity to go to a shooting school, and usually, most times you have either M16s or as a long gun, or you have your just a 9mm, you're right, a Glock or 6 hour. The first time I fired the M4, dear Lord, brilliant. It's like game over because you have that little sidearm on your hip becomes worthless at that point. When you find that bad boy called an M4, that thing just lights up, especially if you got a laser scope on it. Ka-ting, ka-ting. I mean, you go down the line, it's game over.
Yeah.
What does it say, Puppy? What does it say?
Ka-ting, ka-ting, ka-ting. Like that. I think that's the same pronunciation of chain myth.
So
Yeah.
somebody's been using metal targets. I see.
But yeah, metal targets. Yeah, and we had some set up in the field where you had the driver. You have a driver, the passenger, and someone in the back seat, and you got to take them down in a certain order. Not many people get to experience that kind of power, man. It's good. It's good.
Yeah. So the M4 for like my primary, and then for my sidearm, I'm a big fan of the 6 hours. Like my 6 hour
yeah.
is unmatched, dude. That thing is just a
Yep.
beast.
Nice. So here we have it. We have the recommendations for self-defense security in your home, I presume, is what you mean. Weapons of choice, heavily
Sure.
armed.
Self-defense in the home. Sure.
Listen, and someone's coming in the front door. When I see an M4, they decide to retreat quietly.
I don't know. So like a lot of people swear by the shotgun, right? Because the whole like
Yeah.
right. So
Yep.
I don't know. I have so outside of like what I would carry in the event that I had to defend myself. Yeah, those are those two things. But like I also have like a shotgun. So like I think what I have is a Mossberg 500. I think any 12 gauge really, like 12 gauges are pretty standard. Like get a pump action 12 gauge.
Yeah.
The brand isn't gonna it's not gonna fail on you most of the time. And then like as far as like if everybody needs to have like a long range rifle too. So like I'm big on the Remington 700, I think it is, or the Remington 7. It's like a 308. Can't go wrong. Can't go wrong.
Danish, this is interesting to you because you talk to a couple Americans that get to shoot weapons quite often or own weapons. What's your take, man? Has your view changed on weapons since you came to America?
Yeah, well, absolutely. So before coming to United States, one of the hesitations I had was, but there's so many guns. But having lived here for a while, you start to realize that in this country you do need to have arms for self-protection. Of course, I'm not talking about going out and and do mass killings because you're depressed because you were bullied. I mean, that whole problem that's where we need to solve the bullying that's going on, that gets people to do those things. But but in this country, the level of like you just need to be able to protect yourself, and there's no better protection than these guns. So yeah, and then once you become a Bitcoiner and you know that Bitcoin is a bearer asset, which means you're holding it. Well, first of all, what I would recommend, do not have it where you live. That's because, I mean, if you're Oman or something, that puts you in a bad spot. Make sure it's somewhere outside of reach, so no one can take it from you at gunpoint. Should you lose that, you know, self-defense fight. But yeah, you need arms in this country to defend yourself. It's just the way it is. That's how I see it.
Yeah, I mean, being an American that grew up in the backwoods of America, like I grew up around guns. Like I was out hunting with pellet rifles and 20 gauge shotguns by the time I was like 9. Like, you know, killing squirrels and skinning them and cooking them on a fire, because that's just what you do when you grow up in rural America. It's just a part of the culture.
So I want to pick up on this. Right, absolutely, I get it. So I want to pick up on this point from good old Greg Sash one. That
he's back. Okay,
he's back. Yeah. So Preston keeps talking about that, and it's really interesting. Everyone should listen to all of Preston's podcast on Bitcoin, which I believe he drops every Wednesday. That there is a cash and carry trade on Bitcoin where the future price is so much higher than the current price. So you can basically buy Bitcoin now at a current market price and sell the future and have basically like a 20% interest rate just on storing your money there, while the bond market in many countries is negative or at zero. So there is a likely to be, because money seeks a return, and there's bound to be a flight of money at some stage, and the bond market is trillions of dollars from bonds that give zero return to a Bitcoin cash and carry that gives a 20% return. And when that happens, we'll see the bond market implode. And as Greg here says, it'll be there. He's saying that will be the starter for hyper Bitcoinization. Guys, what's your take?
Let me jump in on this real quick, because one of my favorite Twitter follows, and this goes back to Heavily on Clown has sort of discovered the brilliance of Andy Estrom. Greg Foss is a Canadian guy that is absolutely the king of understanding the credit markets, and who will be on the show. This is a $200 trillion market. You can keep that gold shit to yourself, man. Keep that gold shit for $8 trillion market cap. He is talking about a $200 trillion bond market that has nowhere else to go, a negative rate. You only need 4% of that. Think of this. Only 4% of that needs to come into Bitcoin to equal gold. The bond market is where it's at. That's what's going to blow up next. It's on the way. So hell with gold, hell with Peter Schiff. Get ready for the bond market to start breaking down and that money coming into Bitcoin.
And actually as Greg mentioned there, so he sees that as the sign that it's game over and there's no more cycles, is when that 200 trillion wants to fly into Bitcoin, because it's and that's where you'll see the price of Bitcoin go absolutely through the roof. Heavily on Clown, do you have any thoughts on that? Anything you want to add?
I have a lot of thoughts on that. I've been tweeting about that for a long time, about negative yielding bonds and about the bond bubble. Mises wrote extensively on this in Human Action about the fallacy that is bonds, this idea that you can get an indefinite safe return on cash. It's a fallacy. It's not true. It's not real. And obviously today it isn't real. Like, it doesn't exist anymore. This idea that you can get an indefinite positive return on your investment. That's totally safe and has no risk of default. It doesn't exist. It's not possible. And in regards to Preston Pish, like, a lot of people don't know this about me, but like, before I got into Bitcoin, I was all about trading stocks, and in particular penny stocks. And so before I got into Bitcoin at all, I was a huge The Investors Podcast fan. Like, I listened to Preston Pish all the time, and it just so happened, as I was falling out of penny stocks and I was falling into Bitcoin, so was Preston Pish. And like, the universe is funny like this, right? Because like, and then like Preston becomes this big name in Bitcoin, and I'm just like, damn, like I knew this guy before everybody that I respect thought he was awesome. And I love that about him. But he is one of the best analysts like in this space in terms of like the global macro environment out there. Like, he is one of the best in my opinion, hands down. But I've been saying for a long time, like, you know, where does all of this capital go that's getting driven out of the bond market because it's negative yield? Like, it's a ticking time bomb, and it doesn't make sense. And it's, in my opinion, it's going to start in the junk bond market. And like, you're already seeing it happen with junk bonds, where yields are getting driven down to zero. And you know, real yield on sovereign bonds has been 0% for like 0% or negative since like 2008. Like, it's been a thing that we've been living with for a long time now. And these legacy systems, they're slow to react, and they take time to adjust to new dynamics. And this is why I say that like Michael Saylor totally changed the game. Like, what Michael Saylor did was change the game forever. It is changing the nature of financial engineering as we know it. And the bond bubble will pop because you can only do this Japanification of debt scenario for so long. And because what Michael Saylor did that's so phenomenal is Michael Saylor flipped on its head this idea that cash is, you know, the safe asset you hold on your balance sheet like in times of uncertainty. By making Bitcoin his primary treasury reserve asset, he is flipping the script. He's totally reversing the demand for dollars to the demand for Bitcoin as the primary treasury reserve asset. And it will change the world more quickly than you possibly imagine. Like, you remember when nobody had smartphones, and then like a year or two later, most of the people you knew had like an iPhone, or certainly at least like an iPod Touch. And it just totally changed the world in like such a short amount of time. Michael Saylor is doing that with Bitcoin right now.
I want to jump in on this real quick because when you go back to stock to flow, and I'll tell you this with Plan B, but I think it's fantastic. It's a model, of course. It is a model, but it was a model released at, I think it was about $5,000 Bitcoin at the time. A model release then that we look forward to seeing what's going to happen. But I'll tell you what, game theory, who can predict something like a Michael Saylor? No one. Who can predict Elon Musk this year? No one. So that's why I'm so fascinated with the model, because I believe this goes back to what was his name? Nash. Professor Nash had come up with this game theory. We don't know where it's coming from, how it's going to happen, but it will happen. So it's sort of strange to see that you've got a theory out there, and you don't know who's going to pick up the ball and run with it, but someone will. And so everyone stands around saying, well, that theory is bullshit, because you can't tell me who's going to pick up the ball. Then all of a sudden, out of nowhere, here comes Michael Saylor picking up the ball. Oh, by the way, he hands it off to Elon Musk, picking up the ball. And there's your game theory. Game, set, match.
Yeah, it's beautiful, Puppy. Beautiful set. It's game theory now. Anyone who decides to come later to the party will pay a much higher price. Elon Musk already paid a much higher price than Michael Saylor, but he didn't pay as much as Apple, Amazon, you know, all of those guys are going to pay heavily on Clown.
Yeah, no, I mean, I totally agree. I think the biggest winners in terms of like percentage return that you're going to see here in the next 10 years for the people who actually understand this were the retail investors that got in early, right? The speculators who actually understood the technology like before the billionaires, you know, because they had the benefit of free time, right? Because they had, you know, the pandemic and everything to take the time to understand. And like Michael Saylor just so happened to come in at this time, and he even said, like, if we hadn't had this pandemic, I wouldn't be here. Like, I wouldn't be talking to you. Robert Breedlove, I think, is who he said that to. Yeah. And the family businesses and family trust funds, right, that are like investing all of their savings and endowments and free cash flows and capital into this new asset. They're finally starting to understand. And people like Andy Edstrom, like are making major inroads into helping people understand this asset, this nascent technology, and diversify their wealth into it. And in some cases, like in my opinion, when you understand Bitcoin, you go all in. And that's what I like about Saylor is like he had no hesitation. He got it because he's a technology guy. He's not just a technology guy, he's a paradigm shift guy. Like he's the one who wrote the book, the literal book on the mobile wave, right? The shift of technology towards the mobile application market. He wrote the book. And
he sure did. Where, like, he did.
Disappointed in Ray Dalio, right? Because he identifies the shift. He identifies the paradigm shift, but he doesn't see what it is. He doesn't know it's coming because he hasn't taken the time to do his homework and identify the new technologies that are disrupting the world at the moment.
Right, and actually, Michael Saylor said himself that so he wrote that book and he nailed it with "Here comes the mobile paradigm shift." And then afterwards, he realized, look, hardly anyone bothered to buy and read the book, but instead he was making a killing on making the investments, understanding that the mobile wave was coming. And he promised himself that next time around, instead of writing a book, he will first and foremost go and make that investment. And that's what he's done now with buying Bitcoin on to store value on a corporate balance sheet, which is an absolutely huge deal. And we're talking about so many billions of dollars, and it's going to phenomenally change the price of Bitcoin, obviously in an upward direction. So this is what he's done now. He's thrown everything they have on the balance sheet into to Bitcoin, and then afterwards, you could say he kind of wrote the book now because he laid out the manual for other companies to do exactly the same, like all the legal consideration, the custodial consideration, how to buy consideration, all of this. Like he had the conference here. I think it was 4th and 5th of February, outlining how the next 10,000 companies can do the same easier than him because he had to research it.
Hey, and Sean Stacking is messaging in the group chat about all your models are destroyed, Bitcoin goes to the moon. But let's take a moment to appreciate what Michael Saylor did, right? So here we have a high-profile trader, one of these Wall Street types, like he's in the club, right? He's popular. He runs a very successful and very profitable business, simply telling people what to do, right? He doesn't even have to be a good trader because he makes enough money simply telling people what to do every month, sending out these silly little analyst reports on overvalued equities and diamonds in the rough and all this stupid bullshit that these traders do, right? I'm talking about Keith McCullough. Michael Saylor has the balls in the midst of this radical decision that he's making to take all of his company's capital and plow it into this new technology. Michael Saylor has the balls to go on this guy's show, who's in the club, who could totally like ruin Michael Saylor's reputation if he so choose, and say all of your models will be destroyed. You will be proven wrong, like live on air in front of everybody who wants to watch it. And we repeat this meme, but I think we take it for granted. Like that is what this is disrupting, is this legacy financial system that requires all of these rent seekers who have to be around to teach people how to protect their wealth. Michael Saylor, has been a huge piece forward in disrupting that.
There's no one in history aside from Satoshi Nakamoto, in my mind, who has done more for Bitcoin than Michael Saylor. I'm with you on this. Because from the depth of, I wouldn't say despair, but the depths of misunderstanding, someone finally got it, understood it, and he came forward and said, fuck it, I'm all in. I am all in, bitches. And I love that about him. That guy walked the walk, put the money down there, and here he is, still buying. And that's the thing. This isn't somebody that bought it 10,000, 11,000 and said, okay, I'm going to hodl now. No, that motherfucker keeps buying, man. And I guarantee his whole goal in life, in my mind, is to keep buying until it's over.
Absolutely.
God bless him.
Love what you're doing with the video there, Heavily Unfound. It's you bring in the next level, literally, the toxic caviar.
Sideways. Yeah.
And we may have lost Heavily Unfound. Pubby, this I honestly feel this is once again has been a phenomenal show with a really great guest, educating us and our awesome viewers. Best chat in the space, and they know it. By the way, you can find Greg and many others, their Twitter profiles in the links down below.
Yep.
Yeah. I think we
agreed,
may. With Heavily Unfound, did we lose you? We did. So he did his exit scam. He did a puppy.
Oh,
he just
Pubby wins, baby. Pubby wins. Pubby wins this one.
The two last men standing. So yeah, find Greggy also down below. Find many other great people in the chat. Who's Greggy? Hey, Puppy, maybe we should wrap it up. It's been a phenomenal show. We've gone for 2 hours, 20 minutes. Great chat, great guest. Just absolutely love what Ben and Heavily Unfound brought here. It was awesome. Great education.
Yeah, I agree, man. And I made a joke about this drinking game of anytime you hear Nixon, Gold Standard, or Bretton Woods. But it's cool to get these guys outside. They go on the podcast and they talk about that every time. But it's cool to hear them talk about the future of Bitcoin. Okay, they got to rehash that all the time. So I'm glad we were able to get them to hang out and talk about where we're going.
Yeah. So, hey, and he is back.
Can you hear me?
Oh, we're good. Oh, I guess the show goes on.
Yeah.
The show goes on.
So after 2 hours, you bring out the good audio.
Oh, is this better?
Way better. The other one had like that sketchy like for 2 hours, dude.
This is what I'm using right now is my laptop's built-in microphone.
Whoa. Well,
yeah,
it works.
I would have expected this to be worse. So my phone actually overheated.
Okay, yeah. Well, that's what toxic caviar does, man.
So mine may overheat here in a minute. I got about 20 minutes left, I think.
I tried pouring whiskey on the phone, but it didn't help.
Yeah, no, you got to put that somewhere else.
Sounds like you go shanty, pouring whiskey on the phone.
Oh yeah, the shanty memes have been amazing, hilarious. Drinking no coiners tears is awesome. So what else? Yeah, so because we now found out you have amazing audio, Heavily Unfound with Puppy, I definitely want to have these guys back on. It's a great conversation. I really feel, and a lot of fun.
Absolutely.
Any final topics you guys want to discuss? Maybe especially asking you, Heavily Unfound, you're not on here every single time. Is there points, viewpoints, things about Bitcoin that you want to share with the audience before we maybe call it a show?
So if I want to make people hate me, I always talk about how I think stock to flow is bullshit.
Whoa, here we go.
Yeah.
Bring it, baby, bring it.
One of the things that Mises talks about in his so by the way, before I get into this, Plan B has me blocked on Twitter for daring to criticize his model. But I have all the respect in the world for the guy. Like, don't get me wrong, I think he's very smart. I think he's probably very good at what he does. I just think that predictive price models are stupid, right? So, and the reason I think that is because of what Mises said about quantitative economics. So like you can't take supply data and demand data and use it to extrapolate out into the future what the price of a certain thing might be because you can't predict demand. So like it has like you can take all of the supply data in the world, like perfectly accurate supply data like we have with Bitcoin. It doesn't matter because you cannot accurately predict demand. And it's like we're seeing with Elon Musk, like how many of us have said now, I never saw this coming. I never would have predicted that this would happen like this early. You cannot predict it.
Okay, so I think it's a great point. No, Pubby, I just want to answer this one. I'll give you the word to you. I think it's a great point. I thought about it a lot. At the same time, I feel that the model does great work, and you know, it's beyond just coincidence how it's been tracking the price. And so the conclusion I have is there's two aspects to demand. One is word of mouth, hodler. You know, truly understanding Bitcoin, and you know, we all spread the words. And when you look at big numbers, and you know, one Bitcoiner to the next one, then that becomes a fairly straight line. I mean, it's hyperbolic, but it grows at the same pace, in my opinion. And then you say, but why do we then have bull markets and bear markets? That's because there's a second element to that demand, and that is the FOMO, the greed when price goes up, which is triggered by the halving, which then goes so steep that there's a blow off top. And then the other thing kicks in, which is greed. So I think the fear and greed aspect of the demand is like a net positive that goes, you know, very, very net positive, and then it goes net negative. So you can take that FOMO greed, the greed and fear side of demand, and it swings around. What is the underlying demand of hodler, word of mouth, steady growth, and in the demand of Bitcoin? And therefore, I think that that it is in there. So, but Pubby, over to you.
No, here's what I would only offer when it comes to a stock to flow model. One, it was offered with no sponsors, no payment, to someone that came out and said, this is something I saw, something I noticed, offered to the Bitcoin community for free. And I think that's brilliant. I mean, it's a touch point that everyone can talk about it. I will say it has not broken down yet. It has not broken down. And this guy started at $5,000 Bitcoin that it went in there. I think is absolutely brilliant. Should be part of a conversation. Have a good time with it. I mean, my God, if you're betting your life savings on this, well, maybe you should reconsider. But until now, I think it's fantastic, and it's holding up. It's holding up, and until it breaks, I think it will break to the upside. And when it does, I think many people have an apology to send. An apology to send to him, because
I don't know if you need to, you know, apologize. That's definitely, you know, that's up to people.
No, anyone that tears it down, because it was given for free. It's given for free. So
I think
someone that put themselves out there, someone that put it out there for free at the lowest point of the market. It went from we went from 17,000, 18, almost 20, down to 3,000, and it's put out there at 5,000. I think it's fantastic that it's out there, and people can debate it. They can debate it. That's fine. But let me tell you something. That guy put his balls on the line. I think it's cool.
Sure. Heavily on Clown, what do you think about you know, my discussion of demand being you know, linear, like in the parabolic sense, like in how much it grows, like the underlying from hodlers, and what Pubby said. What's your
I like what you say. I like what you say, and it makes sense. But what you're saying is qualitative. It's not quantitative. Plan B's model is quantitative. It is not qualitative, right? Do you understand the difference? Well, do you understand what I mean when I say that? Like,
I believe I do.
I totally agree with. So let's talk about stock to flow. Who popularized stock to flow?
But can I say, before you continue, can I answer what you just said about it being quantitative and not qualitative and not quantitative? I think, you know, if I go out and put, you know, X amount of my net worth in Bitcoin, and that spills over to the next person that on average puts the same amount, and when we talk about a lot of people, it becomes predictable. And you know, if it's a set amount of net worth on average, I do believe it becomes quantitative, which is what you're asking for. But then I would like to go back to you to carry on the point that you were going to make.
It can't be quantitative because you can never quantify. You can never predict human action because human action is always subjective. You can never know what any one person is going to demand vice another thing at any one given point in time in the future, because it's always going to be subjectively valued by the individual. It's going to depend on such a wide number of varying factors that you could never quantify. You can never develop a model that will accurate. And I'm not here to say that, right, that Plan B's model may not even be right for the next 10 years. Like, I've never meant to claim that Plan B's model might not accurately predict, because it could very well predict price accurately for the next decade. All I'm saying is that I have problems with the idea that you can quantifiably predict price when you have an unknown variable, which is demand, on a 2-axis scale, which is price and supply. I think it's impossible. And so my question was, who popularized this idea of stock to flow, right? It was Saifedean in his book, The Bitcoin Standard. And I think that stock to flow is an extremely useful model for understanding scarcity. However, I don't think stock to flow is useful when it comes to trying to quantifiably predict price into the future with mathematical certainty, or with like a degree of mathematical certainty. I think it's useless, and I think it's ultimately distracting, and I think that it probably leads to more malinvestment than not, right? Because you're talking to a guy who has 93, 94, 95, depending on the day, % of his net wealth in Bitcoin, not because of the stock to flow quantitative price prediction model, but because of my qualitative understandings of human action and the value proposition of Bitcoin.
Yeah, so Pubby, do you want to interject here, get a chance to say something before I jump in?
No, yeah, absolutely. No, I would say since it was introduced, this new model, I think for 18 months, the model has held up. I think is an interesting point here. If someone is basing all their investment opportunities upon Plan B and jumping in buying Bitcoin at that time, well, I guess that's on them. Of course, I think the fascinating part is it hasn't been broken down yet. It has not been broken down. And the minute it breaks down will be interesting. But if it breaks to the upside, and that was my entire point the whole way, if it breaks to the upside, I think people owe him an apology, because he put out a model. That was it. Simple, easy. But I think it's just a fascinating viewpoint on how to value Bitcoin. Just like when we have Greg Foss on, Greg Foss will value it in the sense of the credit default swaps in the world. He knows the bond market. It's just a different way to do it.
See, I think he owes me an apology because he blocked me just for liking one of Corey Clifton's tweets critical of his model. Like, I'm sorry, like the Green New Deal is free information that was made available for everybody without cost.
Yeah.
That doesn't mean it's a good idea just because it's put into the public marketplace of ideas for free. Like, that doesn't add value to it just because nobody makes you pay to access that information. It's a fucking terrible idea. And yeah, like, it might sound really good today. We could implement it. Next thing you know, you have 10,000% spiking costs of electricity in Texas during cold freeze. But like, yeah, no, it was a free idea, so it was totally available for free, and everybody deserves to apologize to Ocasio-Cortez or whatever the fuck her name is.
So I want to say something on what you said before, Helion Clown, about, well, it's about the model and how it's working out. And I think if we look at the model and the logic of how it pushes prices, then because stock to flow is accelerating slower than it did in the previous, like it's of course it more than doubles every 4 years with the halving, but it's been like going up a lot faster early on. So this bull run was supposed to be, in my opinion, if you take the logic of the model, longer and less steep. But I think it's I think it's funny that when he came out with it in this cycle, so March 19, you know, as we enter into this bull run that we're in now, we just started that back then. Then this might be the cycle, I believe it is, that that the model breaks down, and then it may actually have worked, but and he agrees to that. Sooner or later, the model will break down, and it's going to, I think, break down to the upside. So you know, we're never going to be able to, I think, totally agree on whether it's it works or not. That's because I think we're breaking to the upside, which is a good thing for Bitcoin.
I absolutely agree, and I've always said that when the stock to flow model breaks, it will break to the upside, and it's simply because it can't account for demand, because it doesn't account for demand, because it's just price and supply.
Fair enough. So I guess we don't fully agree, but I love, you know, us being able to have this discussion, and we're still being nice to each other. Well, I think that's what's important, you know.
That's the thing that kind of irks me about him, right? And it's like, I understand, I block liberally on Twitter. I block a lot, but I try not to block who I consider my allies, even when I disagree with them. Yeah. So I think it rubs me the wrong way when a person like Plan B blocks anybody that's critical of his model in any way whatsoever, because, you know, it's like I'm not on a different team than Plan B, and this is the argument that I get into with people all the time, like my good friend Bitcoin Tina, right, who I respect very much and I think is very smart. Yeah. Who hates the fact that I am critical of the stock to flow model. However, Bitcoin Tina and I are on the same team, right? Like, at the end of the day, like, we hold the same values, we hold the same asset, like, we both win under the same conditions. Him and I just disagree about the minutiae. And I think it's totally healthy and totally fine for us to have constructive arguments about those things. And I would hate for him to block me just because we disagree about something so much.
I think one point can be made for, you know, one thing is the content at which we disagree. Another is the form in which we disagree. Puppy.
No, I was going to say Bitcoin Tina is on the on the short list to come on the show. He also likes to take his time on where he goes and how he expands upon his views. That dude is fucking bullish, and I love that bullishness of him. He knows the game is over. He's like Michael Saylor bullish. The game is over. Bitcoin has won. So yeah, I'm always respectful of the fact that you can have disagreements with someone like that. Yeah, that's fine on how it occurs. We can always have this conversation. But yeah, Bitcoin Tina, if you're listening, and no, Tina does not mean he's a female. It means there is no alternative.
Yeah. I think I kind of need to wrap it up a little bit. This was the beginning of my day. I have a pile of to-do things here. But again, Heavily I'm Clown, absolute pleasure to have you on. I love what you and Ben bring, and I can say for one, and I know that Puppy agrees with me, that we would love to have you guys back on. Love the discussion. And the level of knowledge you guys bring. So, Puppy, do you want to? Do you have any final questions for Heavily I'm Clown, or anything that you want to say, get out there before we go to Heavily I'm Clown for?
Yeah, no final questions, but I promise next time we will be the first show that will never ask you about what the fuck happened in 1971. We're just gonna hit it, and we're gonna talk about current events, and that's it. We're gonna move forward. We know 1971 is bullshit, but no, thanks for coming on the show, man, and hanging out. We just had a great time. I think Bitcoin 2021 is going to melt some faces.
Heavily I'm Clown, why don't you take, whatever you want to say. I'll give the final floor to you before I do an outro on the show. Anything, if there's any point about Bitcoin that you want to get across, or any, blogs, whatever, your Twitter is down below. Take it away, man.
Thank you, man. First of all, I think first and foremost, I think we should thank your chat, because they're just real heroes and they stick through with us through all of our rambling. You guys are the best. Your viewers are awesome, and they kept me laughing through like the last 3 hours, so that's fantastic. And you guys are awesome. You guys are great hosts. Thank you for having Ben and I on. I'm sure Ben would echo my sentiments. Like we appreciate anybody who just recognizes like our nerddom and says, "Hey, those guys, we need to get them on our show," and brings us on and just gives us time to talk. So like we always appreciate that, because we're nerds and like we love this. We get so passionate about this, and you can tell like when we talk, we get worked up and we get angry and we get like passionate. And it's like we just love this. Like any time Ben and I have an opportunity to talk about what we're passionate about, we love it. So thank you so much for letting us come on here and do that. I appreciate
You're most welcome, and we feel exactly the same way. And we're just doing this for the passion. We don't have any income on this. I would like to actually ask you one question. And are we going to see you? Because both Pubby and I are planning to go to the Bitcoin conference in Miami, June 4 and 5. There's a link down below to save 21% if you pay with dirty fiat. There's no commission on that. Just we like to meet other Bitcoiners. Will you be there, Heavily Armed Clown?
You said that's in Miami?
Yeah.
Miami.
June 4 and 5. It's been moved from Los Angeles to Miami due to differing COVID policies.
Let's see.
Because Florida, as you know, has the best governor in the world.
Yeah, DeSantis, he's awesome, man.
Open for business, man. Yeah, Miami, babe. Miami in June.
That's 5 months from now, right? So I might be able to go to that. That's actually the first I'm hearing of this. I might be able to go to that. I am not planning to at the moment. However, I will look into it when this stream is over.
And I'm not saying that. We had Stefan Rivera on the show last week and talked about having a karaoke thing going on with BTC Benny, I think. Yeah, but we do.
That
Get ready.
Fun.
BTC sessions and and Stefan Rivera. I think we're gonna do a little bit karaoke with them there. So come on down, man. We're gonna have a good time.
All right, I'll let that be the final word. So in case you said you never heard about it, Heavily Armed Clown, but we have a link down below, as I mentioned, with a 21% off. And Pubby and I both got the general admission and the after party tickets, and we're looking forward to finally meet. We never met. We've been like super friends for 3 years, and finally we're gonna have a chance to meet, and it's gonna be a party, I think. So I'll let that be the final words. Thank you very much again to the chat, to you, Heavily Armed Clown, for coming up, Pubby, my excellent co-host. And on those notes, I just want to say that be careful by storing more value in dirty fiat currency than you can afford to lose. It's a built-in policy that they will dilute the value of your savings if you store it in dirty fiat. They have convinced you through brainwashing that it's good for you, that they keep diluting and killing your savings. Obviously it's not. So on that final note and outro, thank you very much, guys. Thank you, everyone. And till the next one, bye for now.
Ciao, Bella.